Alright, good morning, y'all. Sorry, I was having some issues. How's everybody doing this morning? Right. Can y'all hear me okay? Just want to make sure. I've been having some issues this morning. Yeah? Alright, cool. Yeah, I don't know what the hell's been going on. Just had some tech issues. But yeah, so I hope everybody's having a good weekend so far. Got a decent amount of stuff to discuss today. So yeah, buckle up, right? So of course, before we do anything, let's go to the news. So we got NFP. Got something related to NFP on Wednesday. The PMI should be pretty interesting. Monday there's no news, so it's to be expected when there's no news, especially if we're ahead of NFP or CPI or FOMC or Fed speeches, rate announcements. If there's no news before and it's on a Monday, expect potentially harder conditions. All right. Add on the fact that we also are at the end of the month. Okay. So generally the end of the month, if you think of Power 3, we're capping the monthly range. All right. So, all things considered, just the things that I just mentioned, there's a possible likelihood of more difficult conditions taking place. So yeah, luckily NFP is happening so early, right? It's happening obviously at the very beginning of the month. But yeah, we'll see what that wants to do. It's most likely going to set the stage for what price could potentially look to do. So let me... So bonds, yields, currencies, DXY, indices. All right. So yeah, we kind of got a feel for the landscape as far as what the news is looking like it has available to us. Again, there may be Monday issues, right? There may be a lack of volatility. Doesn't mean there won't be any opportunities, obviously. But when there's no news, you automatically want to assume that things, if they're consolidated, if they're not really moving, just really, really emphasize the likelihood of harder conditions taking place. Not only because of that, right? There's no news, but it's NFP week, and then it's also the end of the month. It's, one of the last days of the month. So Power 3 on the monthly chart is pretty much completed, right? It's been a bearish month. Right, we go to the monthly chart. Huge candle, right? So the start of the month rallied up, set a high, ended up declining, expanded throughout the rest of the month, hit the low, that low being this low here. It's probably going to blow it out, right? We'll get to that later though. But then as you can see, it's pulled off the low that was created for the NASDAQ, right? So yeah, moving on to the interest rate markets, as always, we could see how price has definitely rallied up. Let's start at the monthly chart just to get a view from there as well. We've had a bullish candle for the month so far. Pretty much, we're about to end. So this month declined, rallied up, set a high, basically filled in all of this candle, took out previous month's low. And then once it took that out and hit this order block, price ended up rallying up, right? So it kind of got stuck inside this candle's range. It went outside but came right back inside. It's respecting this monthly order block. Okay, we see that price came off of this fair value gap and the price started to rally, right? So we're gonna have to see if that's what's gonna continue. Something similar happened across the board with all three of these from this monthly chart. So we could see there's also SMT, I believe, yeah, at these lows. So we'll see if that has an impact and pushes price higher. We have this fair value gap too. Now let me actually clear out everything because we're going to start a new month. Right. And just start fresh, right? So yeah, we have initially, right, you go from this low to that high. That's the most recent fractal low, most recent fractal high. This low to that high gives us our rolling premium and discount, right? So price has stalled out near equilibrium based on this current range that basically, came from a run on sell side, run into the fair value gap and a response, leaving a fractal low. I talked about fractal highs and lows on the previous call from yesterday, right? So we take that most recent fractal low to fractal high on this monthly chart, measure that out, and we could see that we're stuck at equilibrium now based on the monthly range, right? This overall dealing range here, right? So we want to make sure we note that, keep an eye on how price delivers around that moving forward. Again, it's the end of the month, so don't have too much crazy expectations for today and Monday. NFP week obviously is next week, like I mentioned. So we'll see see pretty much where price is gonna want to initially go to start the month based on the NFP delivery. It should be able to set the stage. You got to consider power 3. So if we're gonna have a bullish or a bearish month or week next week, we're going to want to see price go against whatever assumption we come up with today. So yeah, let me put this up real quick. All right, so aside from this monthly equilibrium, again, we see how price, where did it go to? Right, what was the result of last month, and then where could it possibly be headed? Right, well, the liquidity that we took from last month, the overall draw when the month started, which was down here, the overall draw was the low here and this order block on this monthly chart. As you can see, like I mentioned, we took out that previous monthly low, and then now we return back to equilibrium from this low to that high, which was a result of sell stops being taken, shift in market structure taking place here, and then a return back to a fair value gap, and then now, of course, kind of topped out, responded from the midpoint of this order block here. We see a volume imbalance on this monthly chart here. So now we're kind of just going to break down what led to this delivery here inside that candle. This pink, all right. So yeah, you see how the behavior was from that area. We can also see, again, stops were taken. A fractal high was formed. So like I mentioned the other day, when a fractal high or a fractal low forms, once you see that pattern form, the next couple of days can go against whatever the overall narrative is. In this case, it was bullish, ended up declining, retracing to bearishness. Then of course this candle has now filled in the whole entire range here, swept out this low and hit this order block, and now we're back to equilibrium based on this low to that high. You can also see how there's a fair value gap in here, and prices basically traded into it. Also the monthly volume imbalance. So we want to see how price is going to deliver away from this. It basically filled in that fair value gap. So if it can get above this fair value gap, we will see price continue to be bullish. Okay, if it stays below this, it may start to want to attack previous month's low here, because that's what this is going to turn into, right? So we have the monthly high. Monthly high. And we got the monthly low. All right, so looking at this time frame, this is what I see as important, right? These are some of the elements that I think will be important to us to watch. The next month that opens up in a couple days on Tuesday, it's going to start creating a new candle, right? Within this candle's range, most likely, right? Well, this month isn't done yet, so, on Tuesday, a new candle will appear. And I'm assuming that we will be inside, obviously, this range. I don't think it's going to accelerate aggressively and create a bigger candle than this. I think it's pretty much going to die out, and this is the result. You could see for the 10-year yields, we had an indecision candle, but it did deliver into a fair value gap in here, right? Let me change the color real quick. Alright, so let's take this, put one over there. So many people probably be like, all right, what are we doing? Like if they just joined and they are just watching what we're doing. Well, we're doing what's called liquidity mapping and just analyzing the current landscape. Like analyzing a battlefield before you send your troops into battle. We're trying to figure out where we are, where are the most important areas that led to what we've seen price do, where are the most near-term liquidity pools based on the time frame we're starting with, and get a feel for what the range is that price is in as a whole, given what we're looking at here on this asset. So, that's pretty much what we're doing. This, in my opinion, is all I'm really going to highlight, because there's not really much more that we need once we get done with some of this. Right, and then once we get down to those lower time frame, or to the daily chart, we'll have a pretty decent map, right? A little roadmap as far as potential targets, potential outcomes, right? So on and so forth. Looking at price right here on this monthly chart and then assuming like, oh, well, that's going to be my focus, right? Or, that's going to be my focus. That's later. So, if you're focusing on those things, a lot can happen from here going up into there. There's a lot of targets that can be met and a lot of things we could use to frame daily and weekly setups. All right. So yeah, we've got monthly high, monthly low. Potentially going to leave a fair value gap in here. I do see a fair value gap over here. Volume imbalance. Price is pretty much stalled out after taking buy side here, similar to what it did over here. We do have SMT at the highs, so we want to keep that in mind as well. Right, so the SMT's there. We'll see if that has any type of impact. Again, this is the monthly chart. So we're really just wanting to map out what exactly is taking place here, because this is where it's part of how we root ourselves in the higher time frame. Nothing too crazy happens on this time frame for the most part because it takes so long, unless you're a position trader. But I like to get a zoomed out view as far as what's available to us. So then when we go to those lower time frames, we can end up seeing things that overlap. And if a monthly level's hit and there's a likelihood for price to utilize that monthly level and run away from it, big, huge lower time frame moves or significant highs or lows in the marketplace can happen from higher time frame PD arrays. Most of the time, that's the case. So again, although this chart isn't going to change dramatically on a daily basis, the levels that we can transpose to the lower time frames from this time frame are extremely responsive. Like these are where large moves can come off of. Like think about it, right? If we look at this order block, right? Price came down into that. If you had an assumption the price was going to run up from there, right? If you take, from this low to that high, that's 300 points, right? Of course, this is the yield market. So this specific move in like the NASDAQ or the Dow or the S&P could be hundreds of points, hundreds, right? I mean, that's seen if we go over here to this chart, move up to the monthly, we could see this huge decline here. We've been calling for sells and downside. Look how many points that was. That was 7,000 points. Okay, 8,000 points. That's insane. Okay, so you could see, if you can get in line with that, you're telling me that you can't get a specific amount, right? Like 20 to 30 points within that, a couple times a week. Mex C, appreciate you, bro. Found you yesterday on YouTube. You have live 10-15 videos on bias. Which one of them? So all of them kind of go over the process, right? The one that I have pinned as my trailer, I guess you could call it, on my channel, that's definitely the one that you probably want to look at. I made it extremely organized yesterday. It was basically the video from yesterday, keys to daily bias. I went through a lot of the different elements that I use in a way that allows the student to have like a framework to go into like these calls or go into our live trading calls. They could go into that with like a structured plan as far as what I'm looking for, how I determine my ideas, what's behind everything. But then again, pretty much every Sunday I'm going through the process, step by step, right? Start from one stage, and then towards the end of the call, I'm already filling in every single aspect that I operate within. So every single one of those calls is showing you the process. Okay, it's not like, oh, one video focuses on here, one video focuses on there. No, the videos are so long on Sundays because I'm going through like the whole process. I'm answering questions, and it's just, you get into these calls and there's a lot of stuff that's being talked about, all stuff that's relevant. Sometimes I mix in psychology stuff and whatnot, but that's also another thing that's pretty much needed too. And if people can't sit through that, maybe trading's not for that person that can't sit through things, because it is what it is. There's no getting around realities of trading. But as far as your question, which one should you watch? I do believe that yesterday I went into the call with the intention of making things as organized and to the point as possible, as far as highlighting the different elements that you should be able to have an answer for. And then towards the end of the video, I also pull up the rubric I pulled from, stating each topic. I kind of review and go back on each topic after I teach a handful of them throughout that video. It's like an hour and 20 minutes long, something like that. So if I was you, if you've been trading ICT concepts for a while, the previous video that I did yesterday is very impactful. Again, I've also made that specific video the channel, I guess, trailer video. So like it's going to be the first one that people see when they hop on to my YouTube channel. And that's purposeful because, again, yesterday I went into the call focused on doing things step by step and highlighting the order that I use in order to determine a bias, and then how you can also look to structure your process. Because that same thing that I did yesterday is the same thing I'm doing today. It's just we're going to fly through it with the actual assets versus just focusing on things conceptually, So yeah, hope that answered your question, right? So yeah, again, we're going to look for our liquidity, right? See where price was, where it ended up. Where do we think price could go next? Well, again, we're inside this low to that high. There's equilibrium there, and we're at the end of the month. Okay, so we're hovering around there, so I wouldn't be surprised if price decides to not really do much moving into this next week. So I'm very lightly holding on to an assumption, but these are some of the levels, some of the context that got us where we're at. And so again, we have SMT at the lows here. We also have SMT at the highs. We can also see price for these assets have been stuck in a giant trading range, not only here, but also, from this high extreme to that low extreme. If you take this high to that low and measure it out, right, we've been stuck bouncing in between the equilibriums, the equilibrium of the extremes we see here on this chart. Okay, obviously, again, this is the monthly chart, so it's going to take time for this to develop. But nonetheless, what's important, right? What's important for us going into this new month? The monthly high and monthly low, and anything that's in close proximity to that high and that low, right? Any PD arrays above, right? What's above us? Well, we have monthly high, previous monthly high, this wick, right? And then the volume imbalance as well. Below us, we have this bullish order block, okay? We have the current monthly low, right? And then we also have this low, the wick, and then the rest of this fair value gap. So if price was to decline from here, first idea we would look to see targeted if price is going to sell off. The first important area before any of this gets touched is that monthly low, and then also the wick. I'm assuming that's going to stay left. So if we open up the new month and price starts trying to race lower, these are targets also before we even get to this monthly low, and those are before we get to this wick and this low or this fair value gap I just mentioned. Right, so I hope that makes sense, right? That's what's important to us right now for just looking at this chart, right? So now we're going to take this perspective and we're going to go to the weekly chart. Okay, so we're going to take a peek at what that's also been up to, and then what we can derive from the higher time frame down to this, and then go to the daily. And then once we're done with that, obviously we'll move on to the T-bonds and discover what that's going to do as well. So again, as I always say in every single call, right? So why is this market and the bond market important? The T-bond or T-note market important, right? That's this market and this market here, right? These two. Why are these important? Well, the yield market basically impacts in a positive correlated aspect the DXY, right? So whatever this does, it's going to influence the DXY to do. So if we want DXY to go lower, preferably I would like to see the yields go lower as well, because the yields push price around in terms of currency, right? Because interest rates are directly tied to the currency of a country. So if the DXY is going to go up, I want to see the yields going up, that be in this market, and I'd like to see this market go lower, okay? Or if I want to see the DXY go lower, I want to see this market go lower and that other asset go higher, okay? Because it's got a reverse correlated effect. And of course, this market, the T-bonds or T-note market, positively impacts and pushes around the foreign currencies like GBP, USD, Euro USD, as well as the indices. So if the T-bond market goes higher, I'd like to see this market go lower because that'll push DXY lower. And then as a result, more often than not, it'll push the indices and foreign currencies higher if the T-bonds are going higher, okay? But if I want the indices to go lower, I want to see this market going higher and this market going lower, okay? Because this market is generally followed by the indices and the foreign currencies, while this market is generally followed by the DXY. Okay, so that's why this is important, right? I always obviously mention this continuously just to drive the point across. And those of you that are with me all the time have seen how impactful this type of analysis is, and it's something that most people don't operate with because they don't spend enough time trying to learn the relationships between different assets and how all markets are connected, and then how you can use that information to forecast or help you validate and invalidate particular ideas. Okay, so again, that's the importance between this market and the T-ball market. That's why we focus here first, right after we look at the current news events and stuff like that. So yeah. So if you have any questions about that, just let me know in the comments. I'd be happy to help you with that. But hopefully that was clear enough, right? So yeah, we're looking here based on what we just saw, right? What we just highlighted from that monthly chart. We still see the relevance between the monthly high, current monthly high, and the current monthly low. Okay, so again, if it's going to want to run higher in any capacity, it's going to have to now violate these levels in here. If we take a look, we have a fair value gap, right? This large wick here should have allowed this fair value gap to keep responding like this if it was to continue to want to march lower. So we're going to have to see how price is going to behave here, because now we can also zoom in a bit more and again see that we're inside this range here, right? We're at equilibrium. So price is kind of stalling out at this equilibrium point. Okay, so we're going to have to see see price break away from this specific area, and that'll, in my opinion, initiate whatever is going to take place as we march through the next month. I'm loving how less views will demonstrate you, and you just show up. Yeah, it is what. Oh, demotivate me, huh? Yeah, it is what it is. I'm not here to get famous. I'm here to help, and I have many students at this point that I've been able to help, and it satisfies me. And if I get a large following, so be it. I mean, that'd be great, obviously, because you know what that means, right? That means that I'm helping more people, and that's the goal behind both my private community along with my free stuff that I provide. It's to help people. I'm not a Lambo lifestyle pusher. I could care less about having some crazy materialistic things. The biggest flex is not having to work. The biggest flex is being able to work if you choose to, not because you have to. Being able to do things that you set out to do as a trader. That's the biggest flex. Living a modest lifestyle, not being stressed out financially over the way that you make money, and being able to have a skill set that you can pass on to others and give them that ability to decide what they want to do with their lives, and also be able to help themselves financially. I mean, that's one of the biggest things that has humbled me and made me love this industry the most. It's not views, it's not getting attention. I could care less, because I know I can out-trade majority of these dumbasses on social media anyways, and I prove it. And I don't have to show, hey, I'm making this, I make that. I showcase financially some of the gains that I make a couple times a year, but I'm not one that's going to show you my $5,000, $10,000, $20,000 days every single day just to get you to sign up to something, because that puts a false sense of hope in people's minds especially when they're new. And if they're not achieving that within a week, it discourages them, So I don't like doing that. I like to stay process focused, and, whether that makes this channel grow slower than most of these lame idiots on social media, so be it. I know for a fact, just because of the DMs I get on a daily basis, from the student testimonials that I get, that I'm having an impact, and I don't have to change the world. I just have to do my part to change or help change the people's lives that do give me their attention. It's not about changing the world and getting rich off of selling some product or service like most of these people. It's sincerely about coming in here, providing value, and wanting to sincerely help those that'll give me their attention. Because in the vast world of social media, there's hundreds of thousands, if not millions, of people that you guys could be going and paying attention to. Yet you continuously come here and give me your attention. That's something that I value tremendously, and I'm gratefully appreciative of. That's why I started this. It wasn't to get famous. It's not to get rich off of selling some product. It's great that if people do want to invest in me as their mentor, that option's available. If they want to be more one-on-one and get more focused help, I had a lot of recommendations for me to do that. That's why I even opened a private community and started to offer that kind of service, because it was just dramatically being requested continuously when I was teaching for free by itself. So that's why it even started. start trading and think, let me just go and, like most of these people, they start trading thinking that they're just going to start selling a course or something, and that's going to be what they do, versus actually focusing on trading, because that was the goal, I'm assuming, at the start of everyone's career. Unfortunately, it transitions into more of the ugly side of trading, which is pushing things because of their failure to be successful at trading. So I make sure that that's never been me. I can't sleep at night knowing that if I can't trade myself and I'm trying to sell something, which most people try to do because they can't trade, I wouldn't be able to sleep at night knowing that's what I'm doing. So it's just something that I refuse to do. And I know how to trade. I've been able to help people trade good and find themselves. I don't shove my own opinion down your throat, and I don't try to seem like I'm better than anybody, because I'm not. We're all the same. It's just the difference between those that succeed and those that fail is it's the amount of times that they allow themselves to try, and whether the information they're listening to is proper information or not. And I've realized too, even more than ever the last couple of months, that a lot of students just need a different perspective. Things, meaning, don't take away from what's initially taught from ICT, because he's an amazing mentor. If it wasn't for him, I wouldn't be able to do what I do. But a lot of students can't grasp the way that he teaches because he's very complicated. I had to break down things for myself in a simple way to understand the things that he was teaching in his videos itself and in his mentorship. And that process of me trying to simplify things for myself has translated into an ability to also teach others in a more simplified way without taking away from what ICT's taught. Because that's another thing. I wouldn't be able to feel right coming onto social media and claiming that, I revamped this, or this is mine, it's nobody else's. I'm the author. There's no integrity with people that are doing that, and a lot of people do that type of stuff. Some people that I've respected as ICT traders, as charter members, but it's just, I don't know. It's something that I don't respect. I've had to cut ties with a lot of people that came out and started saying that they created this pattern, or they did this and did that, and try to take away from what ICT's taught. I can't. I have more integrity than that, and I just refuse to do that. And if the style makes it so, those who are not serious stay away, and maybe my channel grows slower as a result, so be it. It doesn't matter to me, because I know that even if there's one person, 2 people, 3 people that I can impact, which it's been over 100 plus, but even if there was only one person, 2 people that had any interest, but it would help change their life if I just continued to post, that makes this all worth it. You know what I mean? So, yeah, right? Like Nutty Fafa, right? He said, seeing someone turn an order block into a manipulation block. How sick is that? I don't know. Some people get off by doing that, they are okay with that. But that's scumbag behavior. Why don't you be grateful for what's being given for free? Because ICT didn't have to come out and share this stuff with us. He didn't. I'm gonna be honest, if I was him, and I've been through the stuff that he's been through, like his childhood was rough. His parents didn't want him. He was almost aborted. Okay, he struggled for a majority of his life. His story is just heartbreaking, the things that he had to go through. And if I went through the stuff he went through, but then discovered this, I probably would have been one of those people that never gave any of this stuff away. Because look how disgusting people are in this world, how they treat the things that he teaches. And yeah, he's a little abrasive, he's a little chaotic, but he's a master marketer, and think about all the attention he gets from being the way that he is. And most of it's just an act anyway. He admitted that this year itself. Said that most of the stuff that he goes out and starts, whipping people with, right? And, says that seem insane are all marketing ploys. But those that pay attention and can look past that and see the mentor for the mentor, not judge him by his character, his false persona that he provides to do marketing. If you could look past that, you start to see what's truly behind the curtain. and it's unbelievable. And it's something that you can learn and pass on to your family, something that you can learn and, go and make the world a better place with, right? Like for example, right? Like, let's go to a different subject now about like goals, right? Like, what is your goal as a trader? My goal has evolved. It went from just wanting to provide for my family, have more time to be able to spend with my daughter, because me and my child's mom didn't work out, right? So I wanted to make it so I had unlimited time to be able to go see my kid. So that's why I started trading, right? When I started trading, that was my main objective: take care of my family and make sure I have time with my child. But now it's evolved with something that I've been able to add on to it now as a goal. Like, I feel absolutely heartbroken by seeing like dogs that are left, or animals that are, stranded, right? Like, people just get rid of them, and there's so many stray dogs in areas that I live at, right? And it's heartbreaking. So the fact that I'm able to trade will open up the door for me to be able to start like a nonprofit for animal shelter, right? Or be able to support something like that. So if you can figure out things that are outside of just making money itself, and are more meaningful, that are bigger than yourself, it's harder for you to quit trading and take the downsides as such a dramatic impact to you. So make this endeavor something bigger than just yourself. And then, of course, also from my own personal goals is to help others succeed in this as well, because I know the power of it. So there's a lot of reasons why I do what I do, why I started trading, and then what it's evolved into. And they cement my resolve and force me to never allow downsides to make me think I want to quit. So I want you guys to consider this perspective when it comes to you setting goals and stuff, and really think about why you're trading. What is a bigger objective that you can place into your trading as far as the why? Make it bigger than yourself, and make it for, even if it's just to provide for your family and make sure your family's okay. As long as it's something outside of you, it's going to be very, very helpful, because this is hard, okay? And when you're new, it seems impossible, and I try my best to make it seem more possible and make you feel like you can do it, because that's the truth, but you just have to have the right perspective and do things properly, right? But it's easier for us to let ourselves down, and if we're just focused on money, if we don't get the money right away, it's easier to quit if we have that perspective, versus making our why more meaningful. Maybe you want to, provide for your family itself. Maybe you want to pass a skill set down to your kids, or your other family members. Maybe you want to help others, maybe you want to start a nonprofit. Maybe you want to help the world in a positive way in some form or fashion. If you root things from that perspective, as far as why you're trading, again, it's easier to let yourself down than it is to let something like that down. I learned that perspective through ICT's long videos. There's things that are like placed inside those long lectures that people call boring, and there's things placed behind the chaotic persona that he portrays that are worth allowing yourself to look past the tactics he uses to make this bigger than yourself. You know what I mean? So yeah, and yeah, it makes me sick. Going back to what we were talking about a minute ago, it makes me sick when people are trying to just create their own crap, because it's just they're living a lie, and they're selling people a lie. You know what I mean? What's the issue with giving credit where credit's due? Where's the issue with that? And why would people think that it's less valuable if someone has a different teaching style and they're just allowing themselves to sell or provide their experience? Because traders actually know what they're doing. They do come up with a service that has value, and they sell it to people. You're not buying just information, unless they're just obviously selling information. You're actually buying experience, and you can't replace experience. Like hopping on these calls and watching my process or watching me trade live, you're picking up on what I'm doing, my process, the things that I'm employing that make me the trader that I am, the mindset, all these different things. And it exposes you to things that you wouldn't be able to experience unless you went through that experience over years, and I've made it a point from day one to figure out what are the important things I need to focus on. What's going to get me to be successful, not what's going to get me rich tomorrow. So I paid very close attention to the small nuances and what's actually important, and set aside what I wanted, right? Because a lot of people go into lectures and they're like, okay, I know about order blocks, I know about fair value gaps, I know about this, or I know about that, right? And they go into every call, every lesson, trying to hear that, whatever they're thinking, right? Their preconceived notions, right? They take that into the lectures, and then they miss a lot of the things that are actually important because they're not aware of what's important yet. They just want to hear something that they're familiar with, right? So people miss a lot of stuff when they fly through the concepts, or with anybody else, right? They just want to fly through it and see a silver bullet that's taught, right? When in reality, the silver bullet is the process itself. Everything overlaps itself, and the important things are right in front of us, but we have to just open ourselves up and be receptive to the overall view of things, and so then we can figure out what's important. And hopping on calls like this allows you to see someone exposing certain things that are important that you probably never thought about, right? Especially if you don't have a lot of experience. So that's why going over the videos a lot, right? A couple times, not just once, whether it's my videos or ICT's videos or anyone else that proves that they know what the hell is going on. Because when you learn something for the first time, your knowledge is at a particular level. Once you go through it, your knowledge has now increased a bit. So if you go back through it one more time, especially with this technical skill set we're learning here, you'll continuously pick up new things because your attention and focus point in terms of what you think is important shifts every time you watch a new video. Every time you learn a new concept or learn more about a concept, you start to get more and more in tune with what's truly important, and it allows you to also understand what are good questions to ask. Because as your skill set and experience increases and improves, and your knowledge grows, your awareness to what's important also improves and also grows. So it's a very fascinating situation when it comes to learning about trading, because it's like nothing else. This isn't true about a lot of things, but with trading it absolutely is. So yeah. These are just some things that I've picked up over the last years, and it's just a fascinating process. You know what I mean? But yeah, don't be renaming things because people have no integrity doing that. I have respect for those that do have things, and like for example, there's one guy that I do respect. I don't know him too much, right? I've just seen some videos, but I don't see him renaming things, right? So I have respect for it. And that's the Dodgy guy, right? The Dodgy guy on YouTube, Dodgy something. He's cool, right? The way he does things is obviously very lifestyle based, but to each his own. But I see he does not rename things. He took his one model and he turned that to his system, and he's very honest about that being his system, and he does well. So I got respect for that. Another one is Jade Cap. Right? He's not renaming things. He's doing exactly what he's doing, right? It's a lot of the same stuff that ICT teaches, but it's his own process. And we're able to create our own, like I have my own process. I don't trade like them, but we've learned the same stuff, and we've been able to turn it into our own system, which is ours. And we can feel confident that it's our system, okay? And that system is valuable. And if you could teach others how to use it, that's a very valuable thing to have. And going out and teaching others is not stealing from ICT in that way. If you operate that in that way, right? You're teaching your view on it. You're not renaming things. It's just the way that you operate within the same concepts. That is the beauty in what it is ICT is taught, right? He's allowed us to do that. He's given us that ability because we're all different. One model may not work for another person, but it may work for another person. Right? One person may use the same model, like for example, the 2022 model, but one person will find a buy and one person in that same price leg will find a sell, but they're using that same model because it shows up multiple times, right? So even with the same model, we're not trading the same model, right? We could still find different opportunities using the same information. So again, it just highlights how personal you can make this, and and the ability that ICT has given us to literally create our own systems using these concepts and feel confident that it is ours is just an amazing thing, you know. But again, the way that you operate with integrity, if you are going to teach people, at least from what ICT has shared with us publicly and in his private charter community, you want to make sure that obviously you're not renaming things and you're just showing your system, you know, and there's integrity behind that. And he has no issue with that. Okay. Obviously, people want the brand new thing and, you know, they want this and that. They want it to seem like it's totally new and they created it so they can make a name for themselves. But again, what are you really trading for? Are you trading to be an influencer or are you trading to actually be a good trader? You know, some very few people can do both. You know, there's handfuls of people that do both. But again, you know, you gotta pick and choose. And are you gonna lead with integrity or are you gonna be a scumbag that doesn't want to give credit where credit's due? You know, and there's a lot of that going on. I'm not that type of person, and I could care less if that sacrifices growth. I could really care less, because you know, there's enough people that I've helped already, over 100 plus, that I'm satisfied if I stopped helping anyone at all for the rest of my life. I know that I've impacted people's lives already. I want to impact more though, you know, so I'm going to continue to do this and showcase this for that simple fact. I want to help more people. And it just makes me feel good to know that I'm able to help people with something of value, because I've never had something like that before that I could just pass on to someone that can be really life-changing. So I don't know, it's, you know, it's just something that makes it's fulfilling to me. Right. And I'll never take away respect that I have from ICT, and you shouldn't either. You know what I mean? You shouldn't either, you know. So yeah. So yeah, Mix C, appreciate your comment. Nutty Fuff, I appreciate you pointing that out as well, engaging with convo. But yeah, so getting back to our analysis. Okay, so again, anything that's going to take place outside of this, it's either going to attack this high or it's going to come and attack this low, the monthly high, monthly low. We're inside this range. You could see that the behavior that's taken place as we've hit this equilibrium point. Prices had a hard time bouncing around, right? It's had a hard time getting away from this level, right? So it's just been stuck. And that's a characteristic that's very common when we are hanging around a higher time frame equilibrium point, right? Yeah. So this is reasonable for us to have seen, you know, and until it violates, or not violate, but until it displaces away, it may stay stuck in here. Consolidating bonds and yields markets, or a crack in correlation between the relationship the bonds and yields have with the DXY, foreign currencies, and the indices. When there's a crack in correlation, when prices stuck in the bonds and yields, a lot of times that can lead you to more difficult scenarios as well. Aside from the fact, you know, there's no news coming on Monday, and the fact that we're stuck in consolidation here at the equilibrium point. Right, so when it's consolidated like this with the bonds and yields, that's another signal telling you that, okay, we may be in harder conditions to engage upon and make assumptions on, right? So sometimes you'll have to wait for more information. In this case, I believe that's going to be what we're going to have to operate from in terms of mindset until price displaces away, maybe, you know, until it violates this low here, or if it ends up getting above these levels up here, that will be when I have a more long-term cemented view as far as what I think price is going to potentially do. You know, so that's pretty much what we're going to walk into next week seeing in terms of this market. So yeah, let's see, did we miss anything? We do have an inversion here, so we'll keep our eyes on that. We have this fair value gap in here. We got this fair value gap. So yeah, let's put that. So weekly. And then of course, being on this higher time frame, right? As you guys know that have been with me for a while, we don't want to put too much on this higher time frame. We just want to see what's important. Okay, and if we could, again, in this case, stay below this level, the important range is this high to that low. So if we could stay below this and maybe displace and get down below this low here, that's when I would be like, all right, we're definitely going to probably have a protracted move back to the downside. All right. So yeah. And then we have this SMT here. So again, we want to observe and see if price is going to want to displace higher and get above these levels. That would confirm our assumption that price may want to look to seek this high, maybe get back up into this area. But again, if it stays below and pushes lower, then of course we have these lows as well. And then obviously the SMT at the lows may be invalidated, and then that would support the SMT up here, providing proof that price is going to drop maybe down to this level. We have a fair value gap here as well for this one, and we have the rest of this monthly fair value gap here as well that it could target if it does want to favor continued sell side delivery. All right. So yeah, that is my assumption for that market. Now we'll look at the bonds here. So again, the bonds impact what the NASDAQ is going to do. Okay. And of course the other indices and the foreign currencies. So we see here, let's actually start from the monthly again. All right, so see a fair value gap in here, inversion here potentially. So we're going to want to see what price is going to want to do within this. So if we take from, let's see real quick. So this started this large move, took out buy side, took out sell side. So if we drag this out like this, right, we could see the equilibrium is here as well. Similar to the other market, right? We came up to the equilibrium point and it's kind of been stuck in that level. Okay. And if you transpose that down to these lower time frames, you could see every time that it's met that level, it's had some type of stalled out effect, right? Obviously it initially ended up dropping. But we're still really close to that level, and you can see how price has been stuck, right? Equilibrium it's right above this high here, and prices, again, you could see it consolidating. So again, when price is doing this, we have to wait and see what price is going to want to do. What is it going to do when it wants to get out, right? Is it going to continue to drop, or is it going to, try and attempt these highs up here? We have to see a displacement because we're in a consolidation. You can make the argument that it shifted market structure here, and then it rallied up, right? So we're at a premium. Okay, multiple PD arrays from this time frame have been violated. But if we go to the monthly chart, this also can be argued as a slight retracement into a bearish order block, similar to how this one retraced into a monthly bullish order block. And that may lead to price going higher, right? I want to obviously move forward with a little bit more evidence to really trust it, because we're in a new quarter, we're going into a new month now. So, we'll again lightly hold on to things and have no issue if price does want to not go higher and maybe it wants to favor price going lower. I'm assuming that, we could continue to see this go higher. I do feel that DXY should potentially have the ability to go higher. So that would be supported by this running higher. But again, if that changes and things start to not support that, then obviously we're going to be able to adjust and track this going lower, and then maybe see DXY go lower also. Okay, but going into this new week again, because we're in a range, price is consolidating, stuck at equilibrium. I would like to see a displacement wherever it's going to displace. I don't care. I would just like to see us break out of this specific consolidation that we're inside of. All right, and we could see obviously there's an SMT at the highs here. So we'll see if that has an impact and maybe wants to continue to hold and go lower, right? Or is price going to use this inversion, right? It's a pretty decent response off of this inversion level, off of this fair value gap. We've failed to get below it. So that's kind of interesting, right? So if it does displace and breaks this high, the 10-year and the 5-year do seem like they have an interest to potentially continue towards the buy side, right? So we'll see if that wants to continue as well. At least for the 5-year and this 10-year here, in order for me to trust that this is going to in fact go lower, given the fact that we've shifted market structure after we've taken stops and we've really came up and broke this high as well, I would like to see this fair value gap fail. I mentioned this last week too. I'd like to see this fail and price get below that in order for me to really justify downside delivery is still going to stay intact, right? So if this all continues and say we get above this high, my eyes go directly to this fair value gap. It would be the same for this as well, right? If this high was to be violated, right, say we get a displacement from this level, this is just looking like it shifted, swept liquidity. There was SMT at the lows here as well, and the prices started moving higher, right? So we'll see if that wants to continue, and if things continue to support that, then obviously we'll stay on that side and go higher. There's been a cracking correlation overall for the last 2 months between this market and the indices and foreign currencies. So we'll see if that's going to continue to be the case. And from what I talked about previously, that's been a result of the changing economic landscape in the U.S. Right? So we're able to see now the impact of tariffs. April 2nd is going to definitely show us. And aside from the tariffs, just an overall dramatic change in economic policy that has made the uncertainty in the marketplace pretty high. So the market's been having some trouble figuring out what exactly it wants to do. And as a result of that, we've been seeing cracks in correlation. So again, that all being said, we are able to take that information and know that we're in a harder condition to trade in. So again, your risk should be decided based on that. We're not in some crazy like gunslinging environment that you want to toss in a ton of entries in. So yeah, just keep that in mind. Don't be fearful, right? That's not to promote fearful behavior. It's just, if you want to be a professional, you got to know the landscape. You don't see a war veteran going into battle, just running into the middle of the battlefield just because he feels like it. He takes a look at the landscape, where are the snipers, what's the risk, and they proceed with caution as a result. Okay, so same with this. We're in a financial battlefield. We need to get a understanding of what the market looks like. What's the battlefield looking like? Okay, and then based on that, we can adjust our risk exposure and navigate accordingly. Okay, again, that doesn't promote fear. That promotes professionalism and an understanding of situational awareness. Okay, what is the current condition? How should I operate to protect capital and be effective as possible? That comes from what we do here on a weekly basis and understanding the landscape. Okay, so with all that being said, again, we have a light narrative. It seems like there is showing evidence that it wants to continue going higher, so we'll see if that wants to continue. What invalidates that idea is this market getting below this fair value gap. Same with this, right? It would have to really decline and get through this level for us to then start to think that there's potentially going to be a strong move further to the downside more long term, because this is a higher time frame, so it's a somewhat long term perspective. So we're going to move into next week keeping that in mind. Okay, so I'm assuming that if we're just looking at things from this view, it does look like there's an interest for it to go higher. Ran stops, left SMT at the lows. As a result, price has really ramped up to the buy side. So that fails, that interest of buys fails if this fair value gap's taken, if we can get down below this low, and then same with this. If this low is violated, it gets down below the fair value gap, and then same with this over here as well. All right, so otherwise, if this continues, it'll continue to go higher. Maybe price wants to attack the buy side up here. But again, if price declines as a result of whatever transpires here, then again, we have a game plan for that as well. Okay, and then we could start targeting down there. But again, the conversation or opinion is in a way that we're identifying both sides, because we're in this consolidation here, right? This is the larger one. There's a new month coming. There's NFP next week. So you can't just come in here assuming that you know everything, because nobody knows what NFP is going to do. Nobody knows, what's potentially going to take place given all the chaotic stuff that's happening in the world, in the U.S. economy. So anyone that thinks they know everything is quickly going to be removed from this industry, or they're going to get hurt pretty badly, as a result of their thinking they know everything. Okay, so again, we've painted both scenarios. We're going to favor, if price stays above this, we're going to favor price continuing to the buy side. But again, if that changes, we have no problem in adjusting and shifting to a downside view, right? And that comes from this being broken, the lows here being violated, and then again, not even respecting this midpoint of this wick. This wick is going to be intact as well going into the next week. So there's going to be a new weekly candle. So the down portions of this wick, all the quadrants in there, also act as potential targets if price does want to seek sell side liquidity. We have the monthly high here. Let me actually remove that. So again, if this does want to go higher, this will result in a quarterly shift bullish, right? Like you just saw the annotation there. Okay, so again, we'll just continue to observe that. But again, my eyes are here in this fair value gap. You could see this volume imbalance. That's also a new week opening gap. A lot of times, higher time frame volume imbalances are basically new week opening gaps, right? They're just visually, they look like volume imbalances on the higher time frame. So yeah, we'll see what happens if it stays below. As of right now, it seems like it's holding, right? Clearly, just with adding the annotations, you start to see more evidence as far as its ability to continue to go higher. So we'd have to see, again, a displacement below this to then look to want to favor shorts. Okay? So yeah, we'll stick to potentially looking for buys until that changes, if it changes. Good morning, Sufi, one of my new private community students. Grateful to have you on. Hope the call yesterday was impactful. Right? Not going to get into all that, what we talked about here. But yeah. Good morning, Sufi. Yeah, so hopefully this makes sense. So we're going to continue to try to favor buys unless something changes, okay? And in this, we're going to continue to assume that this is going to short unless, of course, we get back above these areas up here, right? But again, this is in a range, so we're going to have to continue to monitor where the displacement occurs. Okay, so I hope that all that made sense. And now we will move on. Here, let me actually remove these things. Sorry about that. I had a bunch of stuff on there. Whoops. All right, so as we were just doing on the other assets, let's start from the monthly chart. You don't always have to go to the monthly chart, right? It's recommended, those of you that spend time with me here in any capacity, you see why the higher time frames are so important. But the monthly chart, as long as you can have the weekly and daily, that's solid. But if you want to take it to another level and add even more context, then obviously you want to definitely use the monthly chart as well. But again, the monthly chart is just to get a feel for where price is going potentially long term. Currently, we have this monthly high here and this monthly low. So if price is going to reach for this, or if it's going to reach for this, or anything around those areas outside of this range, it's first going to have to break through this current range, right? Like last month, you see before price got up into this area up here and hit this fair value gap, right? It had to break outside of this previous monthly candle's high. If it was going to violate this low, and instead of going to the buy side, maybe you wanted to drop to the sell side. before this candle was to get to this more longer term view, it would have had to violate this candle's range, right? Either the high or the low, or both, right? And you could see that's the same for pretty much all these candles. And because this is the monthly chart, you can use that idea, that point of view on a daily basis, you know, throughout the 4 weeks in a month, you know, because this has 4 weekly candles in it. That's 4 weekly ranges, right? And obviously in each of those weekly ranges, there's multiple days, right? All of that price delivery works inside of the monthly range. And, you know, if we open up in a previous monthly candles range, which is, you know, generally what we do, because that's just how it goes, right? Each candle forms. Then we have context, right? We have more context, more short term, and we know exactly what's important going into each new month, right? We don't look up here if we're down here, right? We don't look up there. We don't look to this extreme either, right? We stay focused on what's important and near term inside the current ranges. Those ranges being the current monthly or previous monthly range, and then the weekly ranges and daily ranges within that. And then, of course, sometimes previous month's highs and lows are targeted like this. Sometimes the previous month's high or low is targeted in conjunction with a close PD array like this, right? So again, this view is aimed at assisting people in zooming in, right? Zooming into what's truly important, but starting from this bird's eye view. Okay, so yeah, so that's going to be the case for this market as well. We have here. Let me take that off. We have we have this current month's high and low. So if it's going to continue to run higher, maybe reach deeper into this bearish order block, maybe even eventually blow the high out, this is going to have to break this high here, right? So from where we're at currently through this high, right, that is a range that we can use to frame a setup on, right? This specific price delivery, keeping this mindset at the forefront of our mind in this analysis, it's going to take a while if any of these downside objectives are going to be taken. So is that important going into this new week? It wouldn't be, right? There's things that are closer within this range that we can use to, break down a particular narrative, right? In this case, we can see that the overall direction has been bullish. We do see that there's, possible buy-side targets to observe. So we're going to favor that until something proves otherwise. We're also now above this fair value gap. Okay. Let me actually see what I want to do here. Yeah, so we got this, again, this monthly fair value gap. So if we could stay above this, it's very similar to what we talked about last week. And again, if you guys do show up continuously on the Sundays, even if you just show up for Sundays calls, hear my opinion, and then go to the next week and do that continuously, there's a ton of stuff you're going to learn. And you'll eventually see the ebb and flow of the market and the validity behind the things that we do. And then, of course, if you hop on the trading calls on Tuesdays as well, it just adds to the information you're going to be able to soak up and the experience you're going to be able to borrow in me calling the market correctly, right? And then when I'm incorrect, you can also witness that as well, because I also dive deeply into why I believe I would have made the wrong decision, when those times occur. But that's very, it's very, it's not very often that we get things incorrect from the higher time frame. Narrative is generally narrowed down very easily. But again, it's not everything. You can get the bias correct, but then you go in and overtrade and over leverage, or you rush your trade and you don't wait for your model and you take losses, but you got the direction right. That's a good example of the fact that bias isn't everything, right? It's a huge part because you want to know which side should be favored. And then, of course, your understanding of bias and narrative can help you figure out when retracements take place as well, which I also teach on this channel. But, it's not everything. It's part of the process. It's your navigation skill, okay? So it's just one piece. All right, so again, what's important for us is the monthly high here, monthly low. This high here, if we pull up the annotations, you can see that it's also the previous week's high, right? So let's drop down real quick, right? So it's, well, not this past week's high, but it's 2 weeks, the high from 2 weeks ago in that weekly range. The current weekly high is here. Let me actually label this. Weekly high. Mark off this weekly low. So again, the monthly high and monthly low and the close proximity PD arrays, that's our objective when we're looking at these higher time frames. You know, where is it came from, where did it go, and where could it potentially go, right? And what is around us that can help build a narrative from this time frame, so we could then drop down to that lower time frame and start to observe exactly what we're trying to see price do. Okay, so if we go down to the weekly, I've been pointing this out as well in both my private community and on these live calls. I pointed out this wick consequent encroachment, and then of course we have buy side that's a next level above that with equal highs, and then we have this weekly fair value gap in here. So that may be impactful if price does want to continue going up there. But again, so yeah, if we see the bonds go higher here, right? Say we see this start to rage higher, and it does end up staying above these levels. That would support the currencies continuing to go higher and then maybe attack some of these levels up here. You could see that there's an S&T at this fair value gap level in here. So we're going to have to see what takes place going into this new month, going into the behavior that we see during NFP. And then, of course, we'll be able to have a more solidified assumption as far as what's more probable. In this case, it just looks like buy side is still going to continue, right? So we're going to have to see if that is going to be the case after NFP, because NFP, one of my students pointed this out to me too, right? I'm going to share it with you guys. NFP, FOMC, any of those super big news events, if you've followed along for the last couple of weeks, I've talked about how news events generally can be the reason why higher time frame moves take place, right? We need institutional sponsorship. So also in many ways, the economic calendar news events act similarly on the higher time frame as a macro, right? Versus the lower time frame, right? The lower time frame macros are for like 1 minute, 15 minute, those lower time frames for entries, right? So we can time the entries properly. The economic calendar acts in the same way for the higher time frame, right? Because institutional sponsorship needs to take place. So if we want to see price delivered to a liquidity pool, or maybe it is in a PD array that we want to see deliver away, the economic calendar can help you in terms of timing that, okay? Because it's going to be the reason. It's going to be the catalyst. So given that statement, going into the NFP announcement this week, or CPI or any of the ones that come later, wherever price is at, right? If we assume, for example, it's going to take out this fair value gap, maybe NFP is going to be used to do that. Or maybe NFP is going to be used to send price higher, right? From this fair value gap, off the heels of this S&T, right? So the economic calendar is extremely valuable because it can act as a macro on the higher time frame, similar to how the macros deliver for the lower time frame when we're trying to day trade, okay? It's just, the higher time frame is using economic calendar data, right? Or those announcements to provide institutional sponsorship. That institutional sponsorship is needed if we're going to see higher time frame levels attacked. Okay, so I hope that makes sense. It's very important. And one of my students mentioned a while back, like I was saying, that it's an interesting study to go in and see how the NFP and FOMC and all the big red folder news events, how those play a role in the overall monthly and weekly ranges, right? Is it the manipulation? Is it the expansion, right? Is it the reason that it does the expansion, right? What part does the economic calendar play in some of those other ranges, right? the weekly range, the monthly range, so on and so forth. So that's a really interesting study if you go in and think of Power of Three and try to figure out or observe the role that these large news events had on price delivery that you're observing in the asset of your choosing. Okay. So yeah, just wanted to mention that. One of my students pointed that out, and I never thought about that. And I've done my own studies on it now, and I can tell you it's a fascinating study. But you have to go do it, right, to see why it's pretty interesting. Right, so yeah, I hope that can be helpful for you guys. But yeah, so again, we're in consolidation here as well. We could see that we're range bound, and we have SMT at the lows. There's a possibility for it to go to the buy side, right? But again, I would prefer to see us finally get back in alignment, with this bonds and yields relationship versus the indices. I would and the currencies, I would very much like to see it kick back in alignment and get away from this Kraken correlation. But we'll see, right? Again, there's opportunities we find outside of the correlation. I'd prefer to be in that type of environment. So we'll see if this new month can provide us with that, right? But again, I'm assuming for the currencies here that we could potentially see price continue to go higher. Okay. Now that changes if price does end up maybe dropping in the bonds and ends up maybe breaking down here and shifts market structure. Because then in order for us to get back in line with a buy in terms of timing from this higher time frame delivery, we would have to see this bearish order block here. The midpoint of this, if this low is violated, that would need to be violated once more in both this market and this market in order for me to continue to get back in alignment with buys. Otherwise, if this low breaks, we have all this fair value gap to target, and that may be used in terms of context for us to aim for draws on liquidity. But then again, if we start to see another displacement and more layered confirmations that we will see price go higher as a result of this fair value gap, then obviously we can kick back in alignment with that as well. But again, we have a monthly fair value gap here. Preferably, if we are going to go higher, I don't want to see us dig too deep, and I'd like to see these levels stay respected. Before these levels are reached for, though, like I've been mentioning, previous month's high and low, previous week's high and low, and previous days' highs and lows, those are all things that need to be considered before we think about these very far targets. Okay, this isn't too far, but in relation to the previous week's high and low and the previous day's high and lows, those draws on liquidity are going to be more near term versus us thinking, oh, well, maybe it's going to reach to here. Maybe it's going to reach up into here, right? Before those events would take place, if they were to take place, it has to break through these more near-term targets in the first place. So this point of view starts to narrow your focus to the important liquidity pools, to the important PD arrays, to the things that are actually impactful moving forward in a more short-term perspective. So my assumption that price is going to go lower, right, and dig deeper into this fair value gap would come as a result of us breaking through this low. Let's see, do we got SMT? No. So yeah, I'd have to break this low, and then I would use this order block to then target maybe the midpoint of this fair value gap, maybe even this monthly fair value gap to see if it wants to act as support. But anticipating a move that breaks through this low to get down to here, anticipating that run, that's a tradable event. You just have to obviously use your model, make sure you're in a kill zone, make sure you're in your timing elements like the macros and whatnot. Whatever your rules are, you just have to place them over this perspective. If you're going to participate in something like that, keeping in mind that things overall don't change on this higher time frame, chart overall from long-term bullishness to long-term bearishness. They don't change until we, in my opinion, break through this weekly fair value gap, this monthly fair value gap, and then just start to really, really smash through these levels. A lot has to change for me personally to disregard a higher time frame narrative, because narrative doesn't change on a day-to-day basis, but bias does. Daily bias does, because there could be a bullish monthly candle happening, a bullish weekly candle happening, but inside that bullish narrative, there's retracements, there's consolidations. So the bias changes from time to time, but you don't want to disregard the overall picture, the overall narrative, because then you'll fool yourself, and then you'll try to maybe force the opposing view too much, and then start to think that you don't know what the hell is going on because maybe you keep losing as a result of that, you know. So it's very, very important to stay rooted in what this higher time frame is doing. Force yourself to build the discipline and patience to sit through watching these higher time frames deliver, so then you can continue to grow into trusting and holding on to a narrative more long term, right? So yeah. So I hope that makes sense. But yeah, so again, just to put a ribbon on this analysis for this asset, if we can continue to see price run higher, we're inside of a bullish narrative. We have created a fractal high here. I talked about fractal highs and lows as well, like in the last call, talking about how this can assist us in identifying a potential directional bias. So there's a fractal high up here, so there is a potential likelihood for us to give, or for price to give us that retracement back into this level before it may be ready to go higher. All right, that's reasonable. Something you can also consider here. You see this fair value gap? You see how there's this large fair value gap? And then that's also overlapped with this large fair value gap. When you see an overlapping level like this, right, and it's doing this, this creates what ICT calls a balanced price range. Okay? Because sell side's offered in a very strong capacity and left a fair value gap, but then there's another fair value gap that overlapped it. So both buy side and sell side has been delivered. So if this is going to continue going higher, again, like I mentioned, this weekly fair value gap here has a strong, a very, very strong indication that it's going to potentially continue going higher. Aside from the fact that we can clearly see that it's been in bullish delivery. Another layer, like I just mentioned, is this balanced price range idea. This overlapping fair value gap here was overlapped by this fair value gap in a very similar capacity, which in this case creates a balanced price range. Sell side's offered in very strong capacity, and then the right side that traded through it was also offered, but in the buy side in a strong capacity. So again, this creates a balanced price range. Anywhere on the chart that you see this behavior taking place, it creates a balanced price range because both sides are delivered. So what do you do with that information? Well, you use that identifier as levels in price where you don't want to see those taken. It should be able to respect and not even attempt to get back down to the midpoint of this balanced price range overlapping fair value gap area. So again, this is supporting the idea that I mentioned earlier, saying that this will continue to favor buy side as long as this fair value gap holds and we don't get down below this fair value gap. Because now think about it, right? If we look at price here, we have a monthly inversion fair value gap. We have this weekly fair value gap, also inversion, but that's overlapped with this. So we have a balanced price range. We have a monthly fair value gap, or monthly fair value gap. And then if we go to the daily, we also have now swing lows as well, right? So if we get a swing low violated, we get the balanced price range I just identified violated, and we get this monthly fair value gap violated. That's all showing us a lack of interest in price wanting to go higher. And that could end up shifting, right, from bullish to bearish, right? So as long as these levels stay intact, the low down here, preferably even the midpoint of this weekly fair value gap, given the fact that it's a balanced price range, it should be able to stay intact and continue to support us going higher. Maybe it wicks down, hits that, and then rallies up and shifts market structure again. It should be able to offer that. And if it gets violated, that invalidates the balanced price range. And balanced price ranges should not get violated if we're going to, in this case, continue to go higher. Okay, it should be able to stay above the midpoint of the balanced price range. So yeah, I want to make sure that that made sense. So if you guys could let me know in the chat, that'd be great. This topic that I just mentioned is something that people majority of times never learn. And it's also something that people overcomplicate, similar to a lot of other things that people like to overcomplicate in terms of this topic, that being balanced price ranges. There's further levels, so we can take that as well. But does that specific phenomenon take place? That's one way to identify balanced price ranges. There's more, but we'll just see if this makes sense first. Okay, so yeah, let me know in the chat if that made sense in terms of why this is a balanced price range. What made it a balanced price range? And then, make sense? Beautiful, Nutty Fafa. So Nutty Fafa, for you, since you're heavily in the community, right? You're in the free community and you're here on a weekly basis. I want you to send me screenshots of you identifying this phenomenon on the higher time frame. Try to give me 10 examples or more, right? Whatever you want to do. Send that to me so I can help you identify it properly, or at least confirm to you that you're identifying it properly. And then, of course, you could send me other stuff as well, like you generally do. But yes, I want you to do that after we get off the call, obviously. That can be your homework. And anybody else who wants to participate in that, you can do it as well. Just join the free Discord and send me screenshots. Okay? So, Nutty Fafa, Sufi, right? That statement you just made is a beautiful thing that you've identified, right? It's absolutely beautiful. That's the balanced price range phenomenon is why an inversion fair value gap, or it's part of the reason why an inversion fair value gap should deliver if it is going to deliver, and you've identified it correctly, and it acts as an inversion fair value gap. That inversion fair value gap delivers one side, right? Let me actually show an example real quick, right? This inversion, right? Let's use this this for an example. Okay. So this, actually, let me see. Let's actually use this one. This is a better example. It's more clean, right? There's a lot of consolidation in there. Still similar, and the rules do continue to take place, right? But yeah, so Sufi asked, inversion fair value gaps and balanced price ranges, aren't they a little similar? They're actually involved with one another, okay? So when you see price deliver like this and creates a fair value gap, price trades, through it, but then gets back into it, maybe turning, well, actually, let's use this one. This is a better inversion because this inverted to go lower. So when there's a fair value gap that forms, and then price trades back through it, right, like this with one solid candle, this should act as a balanced price range, right? So this high, if we saw this candle do this, we would not think price is going to go higher in this scenario. How can you confirm that or assist yourself in confirming that? Well, it was in a downtrend already, right? But if you see this taking place and maybe you're skeptical, like, is it going to continue to drop? If you could see this take place and inversion fair value gaps are your model, right? This is an indication that this is a balanced price range. This also turned into a balanced price range as well. In just it has a little bit different characteristics, but same rules. It traded through it, came right back below it, and buy side and sell side was offered. So it used it as a balanced price range. All of this is balanced because there's buy side and sell side. So if it was going to continue to sell, it should not get back above that, right? So once it did get above that and starts violating previous balanced price ranges, you can see that things start to change and go the other way. Okay. This here, right? This consolidation, accumulation, reaccumulation, smart money reversal, right? First stage distribution violated that previous accumulation area in a market maker buy model. So it started violating balanced price ranges to the left, right? So it ended up continuing and turned around entirely, right? There's something, there's a tactic that me and Sufi talked about yesterday that was pretty fascinating. That kind of puts more evidence as far as why this reversed. Yeah, it was a very interesting topic we talked about yesterday, Sufi. I'm still thinking about that from yesterday. It's pretty amazing. But yeah, so in terms of balanced price ranges and inversion fair value gaps, essentially the validity behind a inversion fair value gap is definitely rooted and has characteristics of the balanced price range. And it also technically is a balanced price range. That's why it should be able to deliver, right? So let me see if we could find an example of one forming in here. Let's see, do we have one in here? Yeah, right here. So based on what I just talked about in terms of balanced price range theory, we have that larger balanced price range down here that should support us continuing to go higher. Okay? And it should be able to hold this level. If it violates that level, our narrative may end up changing because balanced price ranges should stay intact. So this specific fair value gap here, right, took out this low. We ended up shifting above the high. This fair value gap, if it's going to hold as a inversion fair value gap, right, this characteristic that we see here, sell sides traded through, then buy side came right back above it. There's both sides that have been offered. So because of that simple fact, and of course we have a shift in market structure here, if this is going to continue going higher, this cannot be violated. Because if it does violate that, that's breaking through a balanced price range. Breakers, right? So bullish breakers, okay, like this. This is a bullish breaker here, okay? The up candles here, there's a high, a low, a higher high. Sell side was offered, it took sell side, and then buy side was offered as well. So both sides have been traded to, and it shifted market structure, and there's a potential assumption it could go higher. So given the fact that both sides were traded to, and there's an underlying narrative that could end up leading this to go higher, we should not see this broken, right? This particular breaker spot broken, right? This should act as a balanced price range. This whole breaker pattern should end up being a balanced price range, but specifically the high that created the breaker block. That midpoint of that should be able to stay respected, because it, as a breaker, it should be able to be reactive, a very reactive trigger in the market, right? Because it's creating a balanced price range. Order blocks are just balanced price ranges, right? Because think about it. When price goes higher like this and creates an order block, okay, and then shifts below, it does this phenomenon here. Buy side and sell side's offered. So the midpoint of that order block, if it's going to hold, shouldn't be traded back into. Just like how we're talking about these balanced price ranges, midpoints as well. When there's a balanced price range, and whether that a breaker also creates a balanced price range, an inversion fair value gap that trades down below, gets right back above, comes back to it. If it's going to continue, midpoint should be respected, right? So all these perspectives, from inversion fair value gap to breakers to order blocks, they're all bringing you to a balanced price range. It's just different ways of looking at it, different scenarios to paint pretty much the same or very similar perspective. Does that make sense? Let me look in the, make sense for those reversals at certain times. Yep. And yeah. Yeah, Sufi, man, you've only been with me for a little bit of time, man. You've just been getting aha moments dumped all over you. It's going to continue, bro. But yeah, I appreciate your trust and interest in joining the family, brother. It means a lot. Because again, like I said earlier, you guys could be trying to listen to anybody else, but you have found value in what it is that I provide. So I'm grateful. I'm super grateful, especially, to those of you that feel you want to invest in me as your mentor, which is specifically a deep investment in yourself as well. But I appreciate all you guys, even you guys that are just my YouTube family. You're still part of the family, right? So I'm gonna serve you as best as I can. Not just sense, but blowing my mind. I'm glad, bro. I'm seriously glad. So these PD arrays are all. There you go. That's a lot of the PD arrays, specifically breakers, mitigation blocks, order blocks, inversion fair value gaps. Generally, those are all showing you balanced price ranges. Added more insights on BPR for me. Beautiful. Amazing, Nutty Fuff. I'm glad. You're another one that's just been getting a bunch of aha moments dumped on you too. Just from being part of the community here. No. Don't be giving the feds any information, okay? Don't be giving them any ideas. All right? They don't need those types of ideas. Cuz I would have to fight my way out of that. But yeah, so yeah, it's incredible to see some of the things that we discuss and how they just pop off at us, and how it doesn't need to be complicated. A lot of people complicate balanced price ranges. It's not mentioned that breakers and order blocks and inversion fair value gaps most times are bringing you to a balanced price range, and that's what they're showing you at the end of the day. It's just named differently for the way that the balanced price range is being presented. That's a lot of times what the PD arrays are. That's something that ICT has never said, but it's stuff that some charter students have discovered about the characteristics of PD arrays and just the nature of them, and why they're helpful. Why should an order block hold? Just because it's an order block? No. Why should a breaker deliver? Why is it dynamic? Why should a fair value gap that forms inside of a breaker, say there's like a fair value gap down here, but this is a bullish breaker, why should that fair value gap not get traded into? Because it's a balanced price range it's creating. So the midpoint should not get attacked, exactly, because it's already balanced when you can identify those characteristics taking place. And what happens if it doesn't work out, like the breaker fails? Then that just disrespected the potential balanced price range, and it's invalid. So you got to wait. Wait for the scenario to take place again. So you start to see it. A lot of things start to open up. Clarity starts to build. Like, okay, this is the why. This is the how. That again, that's the goal. In my bio for this YouTube channel, and obviously in my offer when it comes to my private community. But any time that you guys spend with me is focused on turning confusion to clarity. And I'm grateful to see that the goal that I set out to achieve is being achieved. Every single day, someone new comes up and says, hey, you helped me do this, you helped me do that, you made this more clear, I feel confident in myself now, or things are changing. It's an amazing thing. It feels better for me to do that for others than my own success feels for me. So I don't know, maybe that's weird, I don't know, but that's just how it is, how it's like what it's turned into for me. It's better. I like to see you guys get them aha moments, because I remember the very day that things just all of a sudden clicked for me, and it was amazing. I can't even explain how it feels, and the way that I can continuously relive that feeling, because I'll never be able to get it again. But the way that I'm able to relive that is by sharing the information and getting others to feel the same way. And so, you guys giving me these responses, these aha moments, and things are starting to make sense. And then, of course, me continuously monitoring your guys' success and accomplishments, it allows me to keep reliving that feeling. ICT says, he said some things like that as well. And I didn't really understand what he meant, but over the past 5-6 years at this point, I can see exactly why he teaches, why he thinks the way he does about his students, and why he's so passionate about teaching, because he's passing on the blessing, and it feels amazing to be able to do that as a mentor. I didn't set out to be some type of mentor. I didn't set out to teach anybody. I just set out to provide for my family and not need to work, make working a, like a choice, not a need or a demand, like a life or death situation. I wanted to be able to open up my life to do things I wanted to do. But then it turned into, what you guys see here, me being able to help others and having a serious passion in doing so while still keeping credit to the man that changed my life, So, yeah, they are all the same. Yeah, majority of the PD arrays are bringing us to very similar areas. That's why you only need one. You only need one because it will show up for one all the time. And if you're able to navigate different time frames, you're able to pull out a lot of different opportunities. But a lot of the stuff is bringing you to a very similar place. Specifically for breakers and mitigation blocks and order blocks, it's putting you in a position where you're identifying balanced price ranges after liquidity is taken for the most part. So you're engaging liquidity, but also being placed in an area where you're able to identify whether price should or shouldn't go higher or lower and why, right? The balanced price range characteristics of these PD arrays that I've just mentioned, that is something that makes people, or that's something that's missing in majority of people's understanding when it comes to identifying this stuff. Because people say, oh, well, it's just going to hold because it's an order block. What the hell does that mean? Right? Like, what does that mean? What is an order block? Most people don't know. But the charter community was told by ICT that they're creating balanced price ranges. Maybe that's something that you probably didn't want nobody to say, but hey, it is what it is. It's out there now. So, all right, Sufi said, if you can see one, you can see the other guys hanging around too. So me, I can just see a lot of things why price should do what it's doing. Yeah, exactly. It helps you build the why and the how, right? And what we do here on a weekly basis and with our bias and narrative process, we're also identifying the where. And then we also have an invalidation-validation process that tells us when something is being validated or is being invalidated. So there's a lot of questions that are answered from the things that we provide, or that I provide here. And a lot of the stuff is focused on live calls because I'm kind of doing something similar that ICT's doing. I want to weed out those that aren't serious. I'm not here for signal junkies. If that's what you want to do, you're in the wrong place. Give me signals. No, you can go find some other idiot that has no idea what he's doing and, go follow his signals. Nobody's gotten rich off signals, and I'm not going to waste my time doing that. I don't have anyone to impress. Watch me call the market. If that's not impressive enough and you, for some reason, have to dig into my bank or watch me make 20 grand a day, that's totally ridiculous, right? If I can call the market, it'll be apparent, which it is. Sufi's seen, Nadifafa has seen, hundreds of other students have seen, and I built relationships with those people, and they're also starting to thrive as a result. The people that want signals don't last, either with me or in the industry at all. So yeah. So Nadifafa said true. Order blocks as high probability when they take out liquidity. Yeah, and then of course if they're mixed with the fair value gap as well, that's also kind of dynamic. Creates the unicorn, right? So when you think about the unicorn, you can also now add on the balanced price range idea. So what I've talked about here is literally insane. Me and Sufi talked about something yesterday in the private community about something that's also freaking insane. Okay, it's something that I was applying already, but we went back and looked over some stuff for a little longer because he was mentioning a particular topic to me, and then I pulled out another piece of information that was just resting there, and we added on to understanding together, and discovered something pretty astonishing when it comes to quarterly shifts and identifying certain liquidity pools and when things adjust on a very, very long-term basis. Not super long-term, but quarter to quarter. So yeah, it's amazing. So yeah, Sufi's killing it, Nutty Fafa, for sure. You're killing it too, brother. Give yourself some love and credit too. Sufi said, yeah, it took away some of your sleep. Hey, I don't blame you, bro. I don't blame you. You're going to be losing a lot of sleep because you're getting a lot of clarity just pouring into you. You've been trading for a while, from what I understand, but all it takes sometimes is just a shift in perspective, a person that you can watch that applies the stuff and is willing to help, and things can dramatically change for you. Nah, you need to be excited. There's no fear. You need to be excited. No fear, man. The market should be fearful of you and everybody in our community, because we're over here siphoning their profits away. So yeah, I hope that whole conversation makes sense. It kind of adds on to the balanced price range idea we just talked about. It kind of adds on to why this particular level should be able to hold, and why we should be able to see price continue to run higher. If it doesn't, and it does choose to decline, the line in the sand for invalidation for price to continue going higher, that would be this weekly midpoint of the fair value gap, because we have a balanced price range down here from that larger perspective. So if that doesn't hold and it violates that, we've now adjusted from buy side to bearish, and we could then adjust very faithfully and be able to trust the fact that we know for a fact narrative has changed, and then we just start going in the other direction while everybody else is maybe trying to buy still, right? Or vice versa, So yeah, I hope that makes sense. We've kind of talked about a lot of separate topics opposed to the weekly analysis, but hey, all this stuff is very important, so it is what it is. So I hope you guys have understood so far as what our assumptions are for the overall analysis that comes with the bonds and yields, what the news landscape looks like, what the we still have to go to the DXY. So bonds, yields, news, currencies so far. So yeah, if everything has made sense so far, okay, yeah. So because everything's good now, we'll move on to the DXY. I'll actually go in and create chapters. I think that'll probably be helpful for those that do just want to get to the analysis. So I'll try to create some chapters for today's video and then future videos. I know that's probably helpful to some. But yeah, so moving on to the DXY. All right, let's go start at the monthly like we always look at, right? So as price was declining, we called all this ahead of time. So you'll notice too, with what I just mentioned to you guys, I stated that this was a balanced price range, right? So again, like I was mentioning in the previous area, or the previous assets, in terms of balanced price ranges, we're looking at this fair value gap in here, and we want to see, is that going to be respected? Notice how this fair value gap was overtaken by this one, and price didn't even attempt to get deeply into it. It just barely retraced a bit on this candle, and it left this open, and it ran away, creating an open gap, right? An open fair value gap. Why? Why did it leave that open? Because this ended up being a balanced price range. It swept liquidity, and things adjusted and started seeking buy-side liquidity. This would have continued lower if it would have stayed inside this and not traded outside of it like this, right? So because this held up, this next candle and the next one after that continued to press higher because the interest adjusted after this higher time frame level was taken, right? So yeah, we're going to look at a similar view when it comes to this as well, right? I mentioned this last week, that if DXY is going to continue to fall on a longer term basis, we're going to really have to stay below this monthly fair value gap. Why? Because this monthly fair value gap has been traded through, traded back to, and through again. Okay, so overlapped buy side imbalance and sell side imbalance. Okay, so if it opens up and retraces into that range or close to it, it should be able to stay below that. Now, keeping this in mind, in that balanced price range idea, if we go back to these lower time frames and observe, okay, we can see how it acted as a brick wall using that view. And as a result, price declined away from that level and did not have an interest to smash through it further. So this shows me that overall delivery is still intact. But if we lose this high up here, this may change the overall state of delivery, and then we may end up losing this this balanced price range. Okay, so if we just get through this monthly fair value gap and start getting up into here, my eyes and attention go all the way up into these levels up here, right? So yeah, does that make sense, you guys? So here, look, we can also drag this out as well, right? If we identify this inversion fair value gap, notice the behavior completely overlapped with the fair value gap here. One large candle, right? As it went to fulfill the rest of it. Price traded into it, gave another opportunity as a balanced price range, or inversion fair value gap, aka inversion fair value gap, right? Look what happened too. It stayed intact. Okay, so maybe you got a little worried when price started really contesting this midpoint. As long as it stayed below it and closed below it and started pushing outside of it again, once it traded back outside of this again, given the fact that it couldn't get through it, this stayed intact as a balanced price range, and you can see the result. And again, we were ahead of this. I didn't mention this, right? Some stuff, I don't mention, I save for my private community. But nonetheless, you could see in hindsight, this took place. In the balanced price range idea, since we're talking about it, you can see that it happens all over the place, right? And it's very, very impactful. Of course, you want to still kind of consider what we're seeing on those higher time frame charts, right? Overall structure, like what's taking place, intermarket relationships, to further justify the validity of something like this, balanced price ranges or any other PD arrays. But nonetheless, the phenomenon it takes place all over, right? It took place here. It took place in here, right? Like there's a fair value gap in here. It got through it. It couldn't get back into it, right? So it created this as a balanced price range. This high to that low swept out the low. So the up candle here, dragged that out, became a bullish breaker. Price had a high here, violated the lows down in here, got back above this high. This up candle and this whole pattern in here, or mode of delivery, acted as a balanced price range. So what happened? Price didn't even attempt to get back into it and continued to rally up, right? Then once you start to see balanced price ranges get violated, like we see here, right? The fair value gap in here, overlapping, but it got back above it. Once you start to see them get violated, it's telling you something. Because balanced price ranges all throughout a price leg should be continuing to be respected in the direction of your assumed narrative. If they start getting violated dramatically, aside from the 3 PDA rules that we operate with, it's telling you something about order flow, right? And of course, there's other things too, like the way that the wicks get delivered into, right? How the midpoints of the wicks get respected. And then, of course, how the PD arrays continue to be respected, how liquidity is being taken and either respected or swept and traded away from, right? All those different things, all those different factors play into your ability to observe institutional order flow. And balanced price ranges, though, are extremely, extremely important because it helps you make the argument that some level should hold or not. And it also helps you validate or know how to validate a particular PD array, like a bearish breaker or a bearish order block or a bullish order block or an inversion fair value gap, right? So yeah, so far, does all that stuff make sense? And then we'll get deeper into this DXY analysis. Yeah, all right, beautiful. Beautiful, beautiful, beautiful. So yeah, we're going to continue to see if DXY wants to continue to respect this monthly inversion fair value gap as a balanced price range. Right, we'll see what happens. If it's going to respect that, then it's going to have to get back through this volume imbalance. We have multiple new week opening gaps in here. You see these gray areas. that's highlighting Sundays, so it's easy for us to identify where previous weeks are. Like I can instantly, without even going to the weekly chart, figure out where the previous week's high and low is, previous days highs and lows, and new week opening gaps. I can identify exactly where they're at without having to really move from one time frame to the other. I can do all my analysis on the daily chart, but still keep in mind what's happening on that larger monthly, weekly time frame, right? So the indicators that I have, they're only there to help me identify and consolidate my thinking, to help me spot things quicker. It doesn't make me take a trade. It doesn't do anything like that. They're just helpful tools that help me in consolidating my thought process, so I don't have to think, where is the start of the week? Where is the previous week's high? Right? Where's the previous this or that liquidity pool? Where's regular trading hours gap? I have an indicator for that one of my students made. So all the indicators that I have are to help me consolidate my thinking. And you should also look at your indicators that you apply the same way, right? So yeah, because indicators are lagging in nature. If they're going to be used at like stochastics and all that, it's showing you data from a long time ago, and it's mathematically doing things when math is not really what's deciding, making decisions in the marketplace. It's not mathematically based. Some things are, but for the most part, directional, bias-wise, narrative-wise, where price is going to go to, it has to do with fair value gaps, balanced price ranges, and liquidity. Okay? That's pretty much it, right? And highs and lows, which are liquidity. So yeah. So again, if we continue to hold below this bearish order block and we start to see price really start to ramp lower, we could see that this is pretty well traded. There's a lot of back and forth, full ranges being traded to. These large wicks are overlapping. This midpoint of this wick here, the midpoint of this wick here, you take those two middle portions overlapping this one candle, drag them over, and they create what ICT calls an implied fair value gap. Right? So it's just another, similar to the volume imbalance, it's another PD array. It doesn't show up all the time, but it does show up, right? Similar to how volume imbalances show up. They show up here and there, but it's not one of the main ones that he talks about. But it's another thing that's there. When you see a large wick, two large wicks overlapping a specific candle, you take the midpoints and then you identify them, right? That little range in there creates a hidden fair value gap, a hidden PD array. And of course, like I said, that's called the implied fair value gap. So if it's going to stay below, or it's going to stay above this, and then continue to push higher, if it violates the middle portion of this order block, our attention starts to really go up into these highs up here. And if it just violates this high up here and then starts to really ram through this fair value gap or show interest to really get through that, we may see a pretty strong acceleration to then maybe create another balanced price range. And maybe that leads to price adjusting. The last quarter was bearish. We see a shift in market structure here, right? So we'll see if that's going to continue to take place, especially if we see this want to run higher, because the yields impact what the currencies do. Because it's a new month, we're going to want to see what NFP does, how that's going to be influencing the market. But again, if it breaks up above this high here, we may be seeing this as a break in market structure, and the midpoint of this daily order block should hold. It has held so far. We have reasons to identify potential buy-side delivery, but if these levels, these PD arrays, these points of interest end up getting violated, then obviously we have no indication yet the price is going to want to go higher for the DXY. WAP link has expired. What does that mean? That's kind of interesting. What the hell does that mean? Can you post which one you're using, actually? Yeah, post the link that you're talking about here so I could see which one you're talking about. I don't understand why that would be the case. Yeah, copy and paste it into here so I could see what link that is. Maybe you're using the wrong one. Or are you talking about the free Discord community? Or are you talking about the paid private mentorship community? I don't think I have a WAP link for the free community. But yeah, let me know. Because of that, each one is leading me to a page which is forbidden. What the hell does that mean? Forbidden. What country are you from? That may be what the issue is. Iran, I've figured out that no services, because of the sanctions, people from Iran, they're not being accepted to use American commerce. Yeah, I've had 6. India. Yeah, I think India it doesn't allow us to. India is on the forbidden list, I think, for WAP. India, Iran, any of those countries that are hostile to the United States that have sanctions, they've made it so people can't participate in commerce with American companies, which I didn't know until this year because a student from Iran was trying to join, and he was telling me that it said the same thing. It said forbidden. So yeah, I wonder. So yeah, if you can go take a screenshot of what it's showing you and go follow me on Instagram and send me a screenshot of that so I could see exactly what's going on, I would really appreciate that. I'm trying to figure out how I can incorporate crypto with like a crypto payment so then I can kind of get around this. Because I have a lot of students from overseas that want to join. I have like 12 people that have asked me from Iran. It's kind of sketch, but Iranian people are amazing. It's just their government and some scammers that are in those parts of the world, kind of concerning, right? But those 12 are really good people. I still keep in contact with them. But yeah, so if you could take a screenshot of what's happening, what it's showing you, and go send it to me on Instagram so I can take a look and see if it's the same message that one of my Iranian supporters was having, I'd be greatly appreciative of that. And yeah, maybe a VPN would help. Maybe. Definitely try that. And then let me know. But yeah, send me a screenshot of what it's showing you. Yeah, you had me very concerned. I was like, wait, forbidden? What are you talking about? But yes, so yeah, when it comes to what we're looking for here, if it was to violate these areas, we have a 2-day order block, a daily volume imbalance, and we also have this implied fair value gap. So if we violate that, plus support the balanced price range up here and support this bearish order block, all right, let's actually go look into that bearish order block, by the way. All right, let's start to break that down and see if we could find the phenomenon that I've just been talking about. Right? So yeah, we see this up move was the one that created the bearish order block. We can see 2 overlapping fair value gaps in here, right? Similar to the balanced price range idea that I've been talking about. And you can see that bearish order block, the mid portion of it, watch, we go to the daily, let's go get the middle portion. Notice where that's at, right? The balanced price range area. Notice how that aligns with the midpoint of this daily bearish order block. It's acting as a balanced price range, right? What you're learning here about the order blocks and these PD arrays is extremely advanced. It's stuff that majority of people don't know. Anyone that claims they use order blocks or any of these other things, they will never mention this, and they don't operate with it like this because they don't know. It's a small group of people. They may know now if they find my videos, but this is super nested deep inside our 2-hour video. So they're even, anyone that comes and tries to look at this stuff is still probably not going to figure it out because most people won't sit through it all. The ones that do, though, they get all the gems. So, but yeah, so I hope that was pretty eye-opening as well. For this, right? So again, if the midpoint of this order block's violated, we start to see balanced price ranges violate to the buy side, right? And that would trigger in my interest to possibly look to see price go higher here. Maybe we are witnessing a quarterly shift from the low here, moving into the second quarter, from bearish to bullish. But if this high stays intact and this order block stays respected, the balanced price range above us stays intact, then obviously we'll continue to try to favor shorts. For now, we're going to try to determine that as the case. We're going to try to see if this can continue to go lower, unless we open up next week and start to see price really ramp to the buy side, right? So yeah. So does all that make sense, you guys? Because that's pretty much going to be the extent of DXY. So let's make sure that makes sense, and then we'll move on to finally the indices, right? As told before, Sufi said, as told before, your ICT from another universe. Got to see through your videos to find the gems. Yeah, there's a lot of teaching things that I do want to incorporate because I also want to weed out the idiots that want to be signal junkies, right? Because they're a waste of my time. They pissed me off so badly because they'd complain and I'd do exactly what I'm doing here and share the same information, but they don't want to study, they don't want to listen to the rules, and then they try to blame me because they're not following the rules. I see why ICT does what he does, as a teacher. He wants people that are serious, like you guys. You guys are serious, the ones that are still here that have been with me all morning. And there's some that popped on. I had upwards of 9 people that joined, and all the way at this moment, there's only 3, right? So it just shows you, some people are here. Tell me what the narrative is so I can take your bias and go find a signal, or tell me a trade. And I'm going to frustrate those people purposely because I don't want to waste my time with those people. I'm not here to give out just signals. I'm here to help those that want to learn. So this can be a career. This can be something worthwhile and valuable, not just like a quick dopamine hit every day. So people can, get off on thinking that they can just siphon people's trade ideas and get rich off of it. No one on this planet has ever got rich off taking signals. So that alone, that 100% failure rate for people that follow signals and they try to get rich off that 100% failure rate should be pretty obvious that being a signal junkie is not going to be exciting. Sufi said, yes, not everyone wants to learn but make fast money, which is never, it's never happening. You can't make fast money in trading, but you have to know what the hell's happening. You have to have experience, and you have to know what you're doing. And the only way you know what you're doing is by learning the right things. Learning the right things takes time, takes time. And most people are not willing to pay that price, in terms of time. So it's unfortunate. It really is. So just one more time. Does everything make sense so far? From the bonds and yields, how they're kind of looking sketch. We got to wait for a displacement. The currencies, right? It should be able to stay above this and go higher, right? If it is going to go higher. If it does go lower, though, and violate this specific area in here, line in the sand is the balanced price range down here. Similar to the DXY, line in the sand is, us breaking through these levels here. That confirms downside. Line in the sand, though, for bearishness turning to bullishness is the balanced price range up here, and whether these levels hold and push price higher. That would justify it would justify a possible quarterly shift unfolding right in front of our very eyes. Yeah, so risk on is essentially big money, smart money traders. They're willing to put risk on other assets opposed to the DXY, right? And then risk off is they're willing to take risk off of assets opposed to the DXY. So that means risk on means potential bullishness in the overall assets outside the DXY. So risk on is basically seeing DXY decline. We've been in a risk on environment, right? So we may be adjusting from one direction to the other. And because they're trying to move to a flight to quality, right? To a safe investment. When the chaos is unfolding in the world, that's why we see DXY and gold and things like that run to the buy side, right? Because people start dumping into those type of assets because they're supposedly the safe assets, right? So they end up taking risk off of the other assets opposed to the DXY in that way, and they put it on the DXY in a risk off environment, right? But a risk on environment, they're willing to take risk on the other assets because the other assets will rally in that case. Right. I actually have a PDF screenshot in the private community for you, Sufi, that highlights that specifically, that relationship between risk on, risk off. Here, I'll go in and tag you in that real quick. So you can just get that picture. Oh, okay, cool. You got it? Yeah. Yeah, so rule of thumb, risk on means bearish DXY. Risk off means bullish DXY. And then all the relationships associated with that, obviously you got to look and act accordingly to there. Okay? That's another thing that people overcomplicate. Doesn't have to be complicated, guys. There is moving parts, but it just takes a little bit of time to navigate using multiple things. But the concepts are purposely taught in a complex way because ICT doesn't want people to take his stuff. But once you learn and you spend enough time learning the concepts, you understand that it's not as complicated as he portrays it to be, right? On purpose. He's even said he does that on purpose. He could simplify everything like he did with the 2022 model. And that's the same with almost every single idea, every single piece of the concepts. It's just he does it complex so people that don't want to actually learn, that just want him to give them signals and give them a 1, 2, 3, this and that, it weeds those people out. And I don't blame him. Like I said earlier, I really don't blame him. And you shouldn't either. But that's why there's always going to be a lane for people like me. And there's always going to be people that are struggling. So it makes me it gives me the ability to make something special for myself as a mentor and come in and start helping students that just need that push forward, and then you guys can go and thrive on your own as well. That's the goal. I want you guys to eventually be hanging out with me just to hang out, or be part of the private community, to just be around like-minded individuals in a thriving, positive environment, just because you want to be there, maybe provide value to others as well. Not from a place of like, oh, I need signals, Signals are provided. I talk about where I'm going to enter, why, break down the whole situation. But again, even the signals I provide, I'm giving context and you have to find your model. I show you where I'm going to potentially take an entry. But I always say, if it doesn't align with your model, don't take the trade. Because now your mindset in that case would be, oh, let me follow him, and it'll create codependency. I don't want you to be solely dependent on my analysis, my entries. That does nothing for you. It's the same as coming into someone's service looking for a signal provider. And no one's ever gotten rich off that, right? Because they overtrade, they overleverage, they don't take profits at the right place because, they're in a trade. The mentor may have called it out. The mentor may get out, but the student following the signal may hold on to it. Maybe he overleveraged. Maybe he doesn't have the same mindset. And then it results in disaster because the student didn't want to learn. Then it ends up in the student complaining to the teacher. Oh, you did this, you did that. When in reality, the student broke the rules and didn't want to listen, is being ignorant, right? And just it's chaos. That's part of the reason why I don't have just a signal service. I want those that want to learn. They're much better mindset, and it's a much more enjoyable experience for both of us. If the trader that's coming to me or looking for a service is wanting to actually learn and take this serious, because I take this deadly serious. This is my life. This is what I'm going to do for the rest of my life. The only way I'm going to get off the chart and not trade anymore is if I die, okay, bluntly, or if they take the markets away from me entirely. Otherwise, I'm going to be constant participant in the marketplace, because it is what it is. It's just the way it is, you know. So yeah, I hope the risk on, risk off made sense for you, Sufi. And then, of course, for everyone, I hope that you guys understand what I'm looking at here. Right, these are my levels of invalidation. If it violates this 2-day order block, that's what this is, and it starts to really break down through these levels, maybe leaves this intact, maybe doesn't even come back and contest this balanced price range, I'm going to continue to favor this going to the downside. Now, if we get a response from this level and it violates this range up here that should act as a balanced price range, holding price lower, if it violates the midpoint of that and closes above it, we're most likely going to take these highs. Depending on how price delivers through these highs is going to be very, very important. It may run through all of this. It may present a similar thing like this, but on the other side to the buy side, right? We may deliver something like this, right? Maybe it wicks one more time through this to sweep these lows out, hits the discount array one more time, and then maybe it does something like this. Right? If this is the case, we may be seeing this turn into a market maker buy model long term, right? So we could see something like that take place if we do see this phenomenon overtake the balanced price range above us. If it can go down a little more to seek a discount, tap the order block, then go up, yeah, I would like that. But again, right, we have a fair value gap in here too on this weekly chart from a while back. So we do want to make sure we keep that in mind too. It still is being impactful. You can physically see it visually. Okay, so that thing from a long time ago, from July of 2024, it's acting impactful here. We have swept out this low, and this response from the low here is responding from a monthly fair value gap, right? So it's delivering from that. We walked this whole entire move down to this fair value gap. And I said if it was to violate through this, it's probably going to continue. Can get as far as down here. Price hit this level, and I've been calling for price to give us a reasonable retracement. Last week, I identified this as a balanced price range. I said if we are going to continue to go lower, it's going to respect that. But if we're going to go higher and turn around and shift overall sentiment, it's most likely going to break through that. And I have a feeling that there is a likelihood for that to take place because of all the chaos in the world right now, right? And they're wanting to run to a safe investment, apparently. And there's more investment coming into the United States, and the tariffs are going to stimulate growth in the United States, and business is coming back to the United States. So there's a lot of things ramping up for the U.S. economy. Short term, there's pain, big drops as we've seen, but for the dollar overall, like in the next 6 months, I wouldn't be surprised if we get above these highs. You know, I wouldn't be surprised if there's a strong move, maybe less time than 6 months. Just because of the way that things are taking place. And then, of course, we don't assume that, right? We need to see things play out technically and then continue to keep our eyes on COT, keep our eyes on seasonality, and see if that justifies that assumption. Right? So given the overall world scenario that people are wanting to come and invest in the US dollar because it's safe for now, right? Then we see how, you know, there's a potential for price to want to run higher and violate balanced price ranges. We did this reaction off of a sell side liquidity pool monthly fair value gap. We see that the indices are tanking pretty aggressively. So we'll see if that wants to continue as well. Because if the dollar is going to be strong or have an impact going higher because of what I've mentioned geopolitically, right, then that's going to be negative for the overall indices. Right? We may not be done. I don't think we're done. There's nothing positive about the stock market right now. There's nothing saying we are going to buy. Right? We haven't even got to that stuff yet. But if this scenario I just mentioned and just laid out takes place and we violate the midpoint of this and end up getting up here, I would want to look back on the daily chart and try to get involved with this, right? Power 3 would be taking place all throughout there. Each candle, okay? And then maybe something like, fair value gap forms in this and maybe creates this as a balanced price range going higher. So then, in that case, I wouldn't want to see price come back down into that as well. So you could see we just continuously do very similar tactics as price continues to provide us evidence for particular things as price delivers. Right? It's a constant thing. It's constantly present. It's repeatable all the time. And hopefully me doing these calls and then even painting this type of scenario out, showing you what could end up showing up. Hopefully that stuff starts to show you just how repetitive this stuff is. Because every week we do the same stuff. It's all the same. But yeah, so I'd like to see if this can be something that unfolds. That would be wonderful. And then of course, this taking out stops over here, reacting from this discount array, staying above these levels I have shown here. On this 8-hour time frame, if price was to give us this type of behavior above this swing high, that may be creating an 8-hour buy-side 2022 model, right? So we can use that as a potential overlapping confirmation, for price to have a reason to go higher. Obviously, if we continue to do that and deliver through the midpoint of this daily bearish order block, right? If not, right, and if it is going to decline, we have this down candle, right? You can highlight the high and the low of that candle, drag that over, and that could potentially act as a breaker. So if it was to violate these levels down here and try to return back, we now have also a framework for downside delivery too, right? If that is what's going to be showing in price. As of right now, this just looks like a simple retracement respecting the buy-side balance price range. And, if evidence shows that these levels are not going to hold and price is going to leave this as a bearish breaker, maybe the yields start to decline and the bonds start to rally, maybe we see this continue to decline. But yeah, we're going to have to see because it's a new month. But all the stuff that we've just talked about, these are just some thoughts and assumptions and ideas that we're going to go into this new week / new month anticipating. Okay? And then whichever one delivers, right, as a result, whatever levels prove that they want to hold, we'll be able to adjust and, figure out how to respond. Okay? I'm assuming that until this swing high is broken, which is also in conjunction with the midpoint of the daily order block, I'm going to assume that there may be continued downside. We'll see. We are, again, moving into a new quarter. We moved into the second quarter back over here. As a result of that transition in quarters, price started with a decline, and then now we've gotten a strong shift above the highs. So if we get this break above this high, that breaks market structure, and then also if we lose the balanced price range, we are now witnessing a quarterly shift, right? If that is what takes place. Okay, and then of course, with that background knowledge, if we can see that take place, we could then adjust our narrative for the DXY from bearish to bullish faithfully with a lot of stuff backing us up, including some of the geopolitics things that I talked about. Okay, aside from technicals. All right, so, hopefully you're noticing that we have a very deep understanding as far as why price should do one thing or another, what validates it, and how we're going to walk forward. And then depending on whatever price wants to do, we have a game plan for both price continuing to favor shorts, in which, we would just continue to chase it lower. But then again, if it respects these levels and violates to the buy side, we have trigger points or validation, invalidation points that can help us get in alignment with an overall adjustment. An adjustment to the buy side would make me believe this is a quarterly shift in play. Going from super bearish to bullish as a response off this monthly fair value gap. Okay. So I hope that makes sense. Sorry if this seems long-winded, this video today. We've kind of been in and out with a bunch of subjects. But again, all this stuff is extremely, extremely valuable, and I appreciate you guys' time. All right, so yeah, I hope this all makes sense for the DXY, for the bonds and yields, for the currencies. Now we will move on to this beautiful market. I'm going to actually pull up something else as well, if I can. We'll go pull up the continuous chart so we can have a little bit more data to look at. Just 1 second. Appreciate you guys' patience. Okay. I have a feeling that a lot of the stuff that we've talked about in the last couple months, if you guys have been with me watching a lot of this stuff and soaking it in and applying it on your own, I have a feeling that just looking at this chart here, things are starting to pop out that we've talked about that maybe you weren't aware of before. Sufi and many others watched me call this entire decline from the rally up, which was a tradable event, to hitting this level, watching it respect that, and then delivering away from it. Amazingly. I thought like over 1,000 points, if I'm not mistaken. Yeah. 1,200 plus points. Insane, right? But yeah, so all that stuff behind us, all that information behind us, we take a look here at this continuous chart. Okay, and we'll go to the monthly like we did on all the other ones. Just get a feel for what this chart looks like. Maybe it has something important, maybe it doesn't, right? Something useful or something, not useful. But we can see and we can observe this huge decline. Price basically has reached for this wick, right? If you outline the quadrants of the wick here, right? So it attempted to get to the mid portion of that wick. Let me move that, right? So this middle portion of the wick should be able to be respected to the buy side if it is going to want to be a bullish month going into the next month. This previous month was obviously extremely bearish. We have the monthly high, just like we were looking at the other markets. We have the monthly high up here, monthly low. So even if price is going to take out this low on the next month, it's still going to have to take out this current monthly low. Okay, so we do have this big wick. We have the midpoint that still needs to be attacked. Before it targets that, though, there's going to be trading that allows for price delivery to attack the low here first, before it was to target that, if it is going to target that. These two targets are before the third quarter of this wick, right? So the 75%. So that's another target. All of that can be in the context of us maybe reaching for this low here. Then all of that, all those different targets we just identified, if price is going to favor to the downside, they're all happening before price would even consider trying to get down below these levels. So this is just a little bit of liquidity mapping just off of the information we are being shown here on this monthly chart. So this will be significant when we drop down to those lower time frames, right? That being the weekly and the daily. Okay, so we'll keep that in mind, right? So this is, remember that this is outlining the wick on the monthly. Let me actually. Okay, so we'll just put that there. So yeah, with that being said, The things that we do want to identify, per usual, is the current monthly low. And so monthly low. And honestly, we don't even got to identify the monthly high because it's way too far. It's not useful at all. We don't need it, really. So yeah. So that's all I would like to observe here. There's not really any fair value gaps or anything really. I mean, you can make the argument that there's one up here. It's kind of far away. And the behavior from that has supported price dropping to the downside. Okay, so let's actually go now to the weekly. Technically changed state of delivery. On what time frame? You're talking about the monthly chart? It's not really much of a nice looking order block. I mean, you can go to this this 2 week time frame. You could see a more clear order block. You could see the 3-month order block absolutely got violated. You could see this large wick here we're reaching to on this quarterly time frame, right? So you're talking about this right there. Let's see if we can identify those 3-up candles as the 3-month bearish order block. Yeah, you could look at it that way if you wanted to. It's even more apparent when we get down to those other lower time frames, which I'm going to show you, because I've been calling for NASDAQ to go lower for a long time, for weeks, and we were ahead of it before it dropped. As it was rallying up, we called the drop when it was up here live. Same how I did this previous week. We did it all over here, all over here. I mean, we've been walking this market like a dog for the last 2 years. But yeah, that observation that you pointed out, those 3 candles, you can absolutely note that because that's down here, right? And as we drop lower, obviously, we could see very similar tactic here too. So this fair value gap in here overlapped with this fair value gap and a shift in market structure after taking buy side and leaving SMT at the highs. Okay. All of that, including this balanced price range here, led to us continuing to be able to trust shorts. Right? 3 PD arrays were violated. A balanced price range to the downside was presented. Higher time frame S&T. And then, of course, the break in market structure, leaving those PD arrays available above us. Right? So all that information that I just mentioned is why the downside has been trusted and will continue to be trusted unless, of course, we lose 3 PD arrays to the upside here. So this short was able to be trusted because when we got to this low, if you now start to look at things that are above us, 3 PD arrays, we have the volume imbalance, we have this fair value gap, and we have the midpoint of this wick here. Okay, it looks a little bit different on this continuous chart versus versus this chart in terms of the delivery, right? It didn't fill in all of the fair value gap here on this current contract month, but this just shows you the difference between some of the delivery in the continuous contract versus the actual contracts. Sometimes it doesn't have the exact same delivery dynamics. The overall narrative, for the most part, generally stays the same. But there's some things that are missing in terms of gaps, in terms of how price delivers in some cases. The only reason I'm on this continuous contract and I'm showing this is because I want to see what liquidity is available to us to the downside for the NASDAQ. That is not being shown here because the data only goes on a quarterly basis when we use the current contract months. Right, so things that do align is the sell side down here, the mode of delivery that's been delivered to the downside. If DXY is going to turn into a rampaging higher prices type of delivery, that would support us in continuing to see sell side targeted. As a result from this fair value gap that's just been presented and delivered away from, there's nothing here telling us that we are not going to continue going to the downside. And this will be highly supported if the DXY does end up ramming higher and invalidating these upper levels. If not, we may end up seeing some type of turning point. If DXY is going to use this as a declining point, we may see that the indices, maybe sweep out the lows here, then maybe start some type of rebound to the buy side. For now, though, there's nothing telling us that anything's going to change, and we're going to continue to monitor the fact that we have sell side here, which could end up being a target. It's a previous monthly low from September of 2024. We have this wick down here, right? So there's quadrants in that wick that may end up being targeted. Before that takes place, though, we have a previous week's low. We have another previous week's low, relative equal lows. And if we go to the continuous contract, we have, again, a previous week's low. It's a current monthly low. Similar, we have a wick down here. Let me erase this. We got a wick down here, quadrants of the wick, and that's also similar on this side as well. So the idea, the overall reasoning behind what the narrative could be between the continuous and the current contract month, they're kind of justifying the fact that price is going to continue to short. What changes that idea? If price ends up rampaging through and we lose these upper PD arrays, the volume imbalance, the wick here, the midpoint, and this fair value gap up here. If it violates that, then obviously multiple areas have been violated to the upside, and we would then look to adjust. If that doesn't change and things stay the same as they are, we're going to continue to try to watch price go lower and target these levels and previous day's lows, previous week's lows that get presented, and in this case, previous month low, until proven otherwise. And any type of buy side is going to be looked at as a retracement, similar to how we looked at this in this previous week. The buy side was not confirmed as a long-term overall adjustment from shorts to buys until this fair value gap was violated. Once it got up there, started delivering away, provided evidence that nothing has changed, right? So, and then you can see the result of it. Presented the high, and we walked it like a dog. Way ahead of time, we were calling for shorts. And these are some of the reasons why. Okay, so yeah, with these things in mind, previous week's high is above us. We got this wick. We also have this wick. Okay. See if there's any other observations we can make. Let's see here. With this continuous contract, we could take this fair value gap here, drag it over, could start to see even more reason why, right? We could layer more balanced price ranges, right? It's delivered both sides. It went back and did it again, but look at how it stayed below, directly below this fair value gap I'm highlighting. That's algorithmic, right? That's highlighting the idea and importance of balanced price ranges. So is this, right? So it's everywhere, right? Those of you that are making sense of the balanced price range theory I've just mentioned, it's one of those things you're never going to be able to unsee it. It's going to now pop off the chart continuously, especially if you go in looking for it. And then looking for it in the context of you trying to trust your model, your narrative, your reason behind why price is going to move in a particular direction. And then observing these things and then seeing when they get violated or if they stay intact, it's also going to add another layer to your ability to validate and invalidate your ideas and overall narrative, right? So yeah, let's go to the daily chart, and then I guess we can probably put a ribbon on it. Hopefully, again, all this stuff has been of value to you guys. Hopefully you guys have learned something new today, or also cemented further understanding, because again, that's why we're here. That's why I do these calls. And so So yeah, I hope things have been of value today for you guys, and your time's been well spent. I know your time is much appreciated from my end. So yeah, definitely appreciate you guys. If you have friends that you think would find value from the conversations we have, from the content we provide, just from, just hanging out with us, if you think they can get value, spread the word. You know what I mean? We need better people in this industry to come out and show what they're doing, that aren't selfish, like that aren't ignorant, okay? Selling the stupid get-rich-quick nonsense just to sell something. We need more people that actually just want to help, that can show the real, that aren't afraid to show the real, and just want to provide value. Because this is an amazing industry, you guys. It's absolutely amazing. The best industry possible. The most opportunity you can ever imagine. The most freedom you can ever imagine is offered in only this industry. There's other ways you can find entrepreneurship and businesses or whatever, but this has no product, no nothing. Okay, you just learn a skill set, get in, push the buttons whenever things align and the rules that we apply are in place, and you can make money and get out of here. Or do whatever you're going to do with it. I'm not a financial advisor saying financial advice, but you guys see what is possible, and I would love to play a role in helping others see it as well. I've helped you guys see it. So again, if you guys have friends that you feel can add to the conversation or could find value, definitely let them know. Spread the word. And it's better that way if this community grows based on word of mouth, because then everybody will be connected in one way or another. And it just makes the community more enjoyable. It makes the community more tight-knit. And, I don't know, that type of growth is meaningful to me. That's how the private community is. Most people know each other, and if they didn't know each other before, they're close and they know each other now, and they're building relationships with people that, may be around for a lifetime, because not everybody understands what we do. Not everybody finds enjoyment from the things that we do. Not everyone can sit down and have patience to learn this. But those that do, that understand the struggles, it's amazing to have like-minded people you could talk to. And again, communities, or at least this community, it'll be a whole lot more tight-knit and enjoyable and valuable to others if everybody in some way is connected. Maybe some of your friends join, right? Whether it's on YouTube or in the private community or in the free Discord. And then if it could just grow with like-minded people that somewhat know each other, I don't know. I just feel like that would make a more tight-knit community. So yeah, if you guys have people that can give value, definitely spread the word. And if you haven't liked the video, definitely like the video and subscribe to the channel so YouTube can pump this out and get people that may be interested involved, and we can start helping them change their lives. But yeah, so again, just hopping down to the daily chart, we can see that weekly fair value gap, right? We have a wick here, just looking at the daily. You can see the midpoint of that was respected to in conjunction with this weekly fair value gap. And now price is delivered through. If you go back and look at some of the markups, I talked about this balanced price range in here and how if it's going to hold in this area, it's going to continue to hold if it stays below this balanced price range. The whole logic we just talked about throughout this call, right? It's present here, even in the previous week that we just passed, in a move that I called, right? Which people witnessed. So this is part of the logic that I was using. I highlighted it. I put BPR. I go back and look at some of the stuff. I highlighted it, but most people probably didn't know why. Right? Why is it a BPR? Well, that whole conversation and tactic has been, I hope, explained clearly in today's call. Okay, and then of course we see the amazing delivery through these equal lows and all the way down to this previous week's low, which I think today, I wouldn't be surprised if we gap below, take out that low fairly quickly, because we're like right there. You know, we're literally right there. It may want to, maybe play around and try to give us a little pullback real quick. Let's see if we can find something. I mean, we do got this bearish order block here on the 3-day chart. We do have, I mean, this is kind of a ugly potential order block. It's low probability order block. When they're really small bodies and there's huge wicks going up and down, it's just not really as valid as it would be if it looked like this. Right? It's less reliable. There's more room for it to trade into it, basically. Right? Of course, we have the wick here. This large wick, this is the largest wick, so we'll take the midpoint of that. I'd like to see us potentially stay below that weekly wick, the portion of that weekly wick. If we could stay below this, that'd be wonderful. Preferably, if we are going to continue to tank. Right? Because we have buy side offered, sell side offered. I also pointed out how this run higher, if it was to decline, it would be creating a market maker sell model. Right? So think about balanced price ranges and the idea that I mentioned, but then also think about how that could tie into a market maker buy or sell model. I'll leave you guys to think about that statement and see what you could find. Right? So yeah, preferably if it doesn't gap below, I'd like to see it spend very little time digging up. Right? And I'd like to see us continue to try to blow out the lows. We have a monthly low here too that I got my eyes on for possible draw on liquidity going into next month. I mean, this next week going into the next month. So the equal lows can be a stronger draw. Yeah, this right here could be, because we're so close and there's so much stuff taking place in the world, bombing and wars and all that, because we're so close, because it was so accelerated and we're literally like within 2 points away from the low. If we go like to the 1 hour, look how close we are. I don't know why the time is different or the numbers are different from one time frame to the next, but we're literally right there. It just needs one tick to get down below it. I wouldn't be surprised if they gap below it, use that gap below, triggering these stops in to then be used as a place where orders get triggered and then they try to pull it back on people, trying to give them the false hope of support in this huge downtrend. Right? So yeah, I wouldn't be surprised if that's what happens. And then maybe it turns around and goes back. We've been extremely bearish, so I really wouldn't be surprised if it does take this and then give a retracement. Maybe it'll do a similar thing that it did in this delivery. Maybe it'll do a very similar thing here. But then maybe it'll use the, in that case, if it blows the lows out, maybe it'll use this wick as a potential resistance and then, continue to march its way down to these levels. Overall, though, my whole assumption doesn't change in terms of narrative. Okay? The narrative is bearish. We're going to stick to that till proven otherwise. And so, yeah, that'll be that. We're either going to open up and gap lower, taking this out, then retrace. It could open up and retrace, then drop, maybe hit this 4-hour fair value gap, as I have outlined here. But overall, whether it goes up to go lower or just gaps lower, I'm still aiming to the downside. Whichever way it wants to operate prior to that, so be it. But the initial assumption is we're going to continue to tank. So any type of buys are counter trend, so adjust your risk accordingly. It's NFP week next week, adjust your risk accordingly. It's a new month, right? And it's the end of this current month, so adjust your risk accordingly. Meaning just, cut your risk by either a quarter or by half, depending on how you feel about what it is that I just mentioned in terms of the risk, right? And again, I wouldn't want to see price get through this wick midpoint, the large down wick. This is the 50% of that. If we are going to continue to drop, this run higher, this run lower, completing this market maker sell model should act as a large balanced price range in itself. So I don't expect price to get back through this level if we're going to continue to find sell side delivery taking place, right? Especially given what we're seeing, we do have a reasonable target down here as well, like I mentioned. So yeah, that's my assumption for the NASDAQ, and it's very similar across the board because all three of the indices are delivering in a very similar fashion. We do see there's an SMT here, that a failure to get below this here, still got SMT. But again, if we see the DXY go higher, right, like I've mentioned earlier, could be the case. If it does take place and the DXY is going to act as a flight to quality, given all the chaos taking place, which is the conversation taking place right now, if the tariffs and stuff are going to stimulate our economy, if business is going to continue to come back to the United States real soon, April 2nd, that's when a lot of big things are going to take place in regards to that. But if all that stuff's going to take place, then again, we may be still continuing to see price fall aggressively until something changes within the indices and just overall data that comes out. But yeah, until something proves that it wants to go higher, I'm going to just assume that this SMT is going to fail, that we're going to continue to target the shorts until something is proven otherwise, right? What is that something that could prove otherwise? If price just starts to really ram up through this particular area in here, there's a breaker in there. There's a completed market maker model. So preferably, if I'm going to continue to trust this to the downside, I also highlighted a weekly down wick that should be able to support price if we're going to continue to drop. But then we also have this 8-hour potential bearish breaker. So that should act as a balanced price range, and it should not trade through the midpoint of this bearish breaker here. If it does and it gets outside of it, then obviously it's telling us we have to readjust. There may be something taking place that may change things, right? So yeah, in terms of let me look at the comments. How does S&P low compare for S&P? Oh yeah, I just talked about that, S&T. So yeah, the S&T being present, we also have to couple that with obviously what the other markets are doing, what the overall sentiment is. What's the reason the S&T should hold if it is going to hold? Is there an interest for price to give a strong run to the buy side? If not, then a lot of times we're going to see things fail, and that'll be part of the reason why it fails. Right? It's just the overall context and what the intermarket relationships are showing us as well. And if that's the case, right? If we're skeptical, like we don't know 100%, or with high convincing, right? If we're not highly convinced that the S&T is going to hold, or we don't know if it's going to hold or not, you want to make sure that you're observing, where price is at, right? What would the reason be, right? What are intermarket relationships doing? And if you can't decide based on that data, you just tell yourself you need to wait, right? Like, I'm just going to wait for more data, and I'll let it print and see what the response is, and just be patient to try to see if it'll show us more evidence of either holding or failing. Sometimes it's going to be the case, right? Sometimes things are going to be like, oh, I don't know. It's better to just sit back and be like, all right, I need to watch for more information. That's what ICT says from time to time. I need more information. So if he does that, we have to give ourselves the permission to also do that at times where it seems confusing to us, or we're unsure whether something's going to take place or not. And then, of course, that doesn't, even if something does take place and you maybe have missed an opportunity, that doesn't matter. You just have more evidence for your next opportunity, so then now you can have more trust in whatever it is you choose to engage in as a result. Okay, so different perspective when it comes to waiting for a particular idea, why it would be important, and how it could be beneficial to you to make that type of decision when certain things happen that make you uneasy. All right. So yeah, that about does it for our weekly analysis this week. Of course, we talked about a bunch of different things. I feel all you guys can benefit from. But yeah, in terms of all the things that we've talked about today, do you guys have any specific questions before we put a ribbon on it? Again, just to reiterate our assumption, the yield market, we want to see what's going to take place here. Is it going to continue to rally and get through this stuff and promote buy side in the DXY? Or is it going to stay below this and start to ram lower, promoting downside in the DXY? I'm assuming that, we may see this continue to run higher here. But obviously we'll see what happens. We're at higher time frame monthly equilibrium. Price is consolidating. So again, we need to see displacement take place in one way or another to be able to fully cement our assumption. But if we want to see DXY go higher and continue to push the indices lower, I'd prefer to see this go higher. Okay, so we'll see if that's justified in the coming days. We'll also see a very similar thing with this. Is price going to continue to drop, promoting the downside in the indices? If we're going to want to see downside indices, I'd prefer to see this continue to slide and drag us lower for the indices to go lower as well, and trust it. And then, of course, if this goes lower and this goes higher, again, we should see DXY go higher and the indices and foreign currencies go lower as a result of strong DXY related to that. Okay, so I hope that makes sense. If we do see price rally up in here and not favor anything to the downside, which kind of looks like that could be a possibility, then at some point we'll potentially see the indices turn around and go higher, right? But we'll have to wait and see if that's going to be in the cards. For now, we're gonna keep this in our mind because it is going to be impactful, but it is in consolidation. It is still stuck in overlapping trading ranges, right, from the past couple weeks, 4 weeks. Okay, it's been just back and forth, back and forth. But it has gravitated to the buy side, but still back and forth. So it's had a hard influence, or it's been hard to influence the other assets with this being in a state of overlapping consolidation and uncertainty. But 4 months ago, 3-4 months ago was the transition from one president to the next, and it was the transition from one economic policy to the other. You could see the uncertainty with how price has been behaving in relation to that, right? It's just been wild. We have 1 week, 2 week, 3 week, 4 weeks, right? So that's from the past month. There's been some pretty dramatic changes, past month and a half. And as a result, that's what's happening. All right. So again, we'll keep these in our mind and what we just talked about. We do see that there's, for the currencies, we've been going higher. We have that balanced price range we're observing down below, right? That being this fair value gap overlapped by this. So with a monthly fair value gap, if price does break down, I want to see how far it'll go into this level. I wouldn't be surprised if it digs lower into that and then rallies, but I also wouldn't be surprised if it uses this SMT at this level and continues to push price to the buy side, given what we're seeing at the current moment. But if we break this low and we break this low and it starts to violate these levels down here, that'll start to give us evidence that things have changed from bullish to bearishness. And if that is the case, to support that idea going lower, if that's what takes place, violating the low down here, I would like to see DXY start to turn around and justify buy side delivery, right? And so we could paint a narrative around that and see if those intermarket relationships can fall in line and start to support us going lower as we move into this new month. Also kind of seasoning the start of this new quarter, right? So we've been bullish. We'll see if that's going to continue some of the things that I just mentioned. And again, if we drop down to the 8 hour, we have this balanced price range down here. We have SMT at the lows. If that's going to hold and we're going to continue to go higher, I'd like to see this price delivery stay above the midpoint, right? Create this as a bullish breaker. And then this portion as a balanced price range as well, aside from just the breaker itself being the full balanced price range we're observing. We also have a daily bullish order block. So the midpoint of this daily order block, right? That's part of this whole price delivery, which is also classified as a balanced price range. Okay, because like I mentioned earlier with the balanced price range conversation, a lot of the PD arrays are providing details to how the balanced price range is creating itself, right? It's just giving it a simple label, breaker, order block, whatever, right? So we're going to see if these levels will hold and continue to punch higher. If it does decide to do that, we know that price is continuing until proven otherwise to go higher. But if we violate this down here, we got to study how the behavior is going to be, right? I'm assuming that if we get below this fair value gap, we'll probably give way and start attacking the relative equal lows here, eventually getting into this fair value gap. And then how it delivers in this fair value gap, our line in the sand for bullishness overall, higher time frame, long-term wise, is this fair value gap midpoint, aka the midpoint of the balanced price range that's below us. So that would then justify, we would then see a shift from buy side delivery from the last quarter to then potentially witnessing a quarterly shift to the sell side if this is to be violated and deliver in that way. Okay. Otherwise, it'll continue going higher, right? So I'm assuming because of what we see here, there's nothing that's changed. I'm assuming that we'll see price continue to go higher. We do have a fair value gap in here. It's also kind of trading into a couple times in this weekly fair value gap. So we'll also see what the behavior is going to be from the low of this. It's also coupled with this fair value gap. We have one up here as well, but that's not really overlapping. So we'll see what the delivery is. If we do get a response away and we get below this, again, my attention goes to the lows here in the fair value gap. But otherwise, if it holds, our aim will be this weekly high up here. You could see how I have the weekly high and weekly low outline from the previous weeks. Those are going to be impactful regardless of whether price wants to reach up to these upper extremes or if it even wants to reach down to this balanced price range. The weekly high and weekly low from the previous last 2 weeks are clearly in close proximity, closer than this extreme down here is and the extreme up here. So any idea would be framed with this stuff in mind, okay? And, whatever you use to get in, depending on what price shows at that moment, whenever you're going to trade, obviously is going to have to, we're going to have to see, right? But both scenarios are painted. Because nothing's changed, we'll favor buys until this is violated, and in which case, we would then start to seek down here. And then how it behaves in here, if it does get down there, would determine what's going to potentially take place throughout the next couple weeks, because going into the new month, right? NFP is going to have a heavy impact in deciding which direction is going to be favored, whether it's going to continue to buy in the current narrative, or if we're going to get a potential start to a quarterly shift that may look to then try to punch through some of this. In which case, if this takes place to the downside, that would then support bearish indices, right? Because remember, this goes with what the indices do for the most part, and both of these are influenced by what the bond market does. So if the currencies are going to drop, if we find it dropping eventually, and then we see the indices dropping as well, we could validate that and support that with a back-end fundamental analysis concept using this market, right? So if those two are going to drop, we would like to see this support that as well. These may stay in consolidation because what's happening economically is directly impacting things that are like the interest rates. There's a lot of work happening in that realm of the financial sector with interest rates and all that. So that's why we're seeing this heavy back and forth, indecisive, uncertain type of delivery. So again, it's just part of the risk profile we're trading within. If you've been struggling and things have seemed like they're disjointed or not showing up how they used to, right? Or how you would like, right? Like clean like you would like. Maybe it's a little bit messy. That is part of the reason why we're in a higher risk environment. Okay. But yeah, so I hope all this stuff makes sense with the currencies and what we're looking for. Both perspectives. Again, we're focused on buys until we get proven otherwise. What proves us otherwise? This low or this specific range in here gets violated. If that happens, then we want to watch what price does down here. Then whatever it does down here will determine whether we are going to continue going higher or if it's going to turn around and start to really violate these lower levels. All right, so that is the overall gist of what we're going to be monitoring here between the Euro and GBP. And now we move on to the DXY. Okay. And the DXY is taking a dive. We got these levels down here. We're going to see if those hold. If they hold, we're going to try to see price get up and contest some of this upper fair value gap. And if it doesn't, if it breaks through these levels, price is going to potentially continue this downside delivery to the equal lows. And so with that, with both those scenarios at play, we're going to trust that, potentially downside is going to continue. We're seeing evidence that may change here, which just like the currencies over here, if they do end up shifting and going lower, we find reasons like, price breaks a low here and starts aggressively pushing. If we see the opposing view take place here with the DXY rallying and breaking up above these levels, like I mentioned earlier, then that all supports both the currencies and the DXY providing a quarterly shift taking place, given, the new quarter we've went into from this current month on the 16th, going into the next month as well. Okay, so that could set the stage for next month, in April. That could lead us to buy side DXY, continued aggression towards a downside for the currencies, and potentially continued downside in the indices as well, if that takes place, right? So that's what we're going to go into this week monitoring in a nutshell. And of course, all of that goes hand in hand with whatever could take place in regards to this, right? So if those things are going to take place, then we'll continue to see this press lower. That's my assumption. I'm going to continue to assume sell side is going to be targeted. This is the continuous contract. We could see there's a fair value gap down here that may end up getting attacked. Okay. If I could highlight that. And then, if it does end up violating the low there, then in this continuous contract, we have that. And then, of course, we move on to the current contract month data. Again, going into this new week, I want to see how this gets attacked. Is it going to open up with a gap down and then maybe retrace to set up a further leg lower? Is it going to leave this low, maybe set that as a strong support level, and then maybe retrace into this 4-hour fair value gap, then set up a short for like a, Tuesday, Wednesday high of the week for power 3 bearish, then drop? Or is it going to, leave this and then maybe come back and attempt to get inside this bearish breaker a bit more, then look to deliver? Preferably, I don't want to see this fair value gap traded into too much. If we go look at some, deeper context in here, like the upper portion of this fair value gap has a lot of price delivery, so if this is going to act as a bearish breaker acts, if we go from this high to the low there, consecutive down candles, highs taken, we got quickly below it. If this is going to act as a potential bearish breaker, preferably we want to see the midpoint stay left open, because it acted as a balanced price range. So this should be left as a breakaway gap. Okay. So yeah, we'll see if all that's going to be in play. But overall, in a nutshell, those are all our observations, aside from some of the side lessons we did today. So where are we in terms of internal and external range liquidity in the higher time frame for the indices? So we are specifically in a mode of sell side delivery. So if we're in a mode of sell side delivery, external range liquidity is always going to be the lows. Okay? If you're looking from the higher time frame, internal range liquidity will always be fair value gaps and order blocks above us. Once it hits those internal range liquidity pools, like highs that are internal like this in the downtrend, or a fair value gap or order block that's above in a downtrend, that's always internal range liquidity. Then when it starts to deliver away, the lows become external. So internal to external. And then vice versa when we're in a bullish trend. in a bullish trend, the highs are always external range. The inner portions where price retraces to will always be internal range liquidity. Short-term lows included, if they're being taken to stay in a buy-side delivery. So yeah, that is a question I get a lot too, but I hope that was a clear enough explanation as far as how to classify internal and external range liquidity in a very simplistic manner from the higher time frame. All right. So yeah, as long as that stuff has made sense to you guys, I guess, if everything makes sense, if you guys don't got any questions, let me know if you guys have some questions. If not, of course, we can put a ribbon on it and we'll call it a day. So yeah, let me know in the chat if you guys got any last minute questions, if everything made sense. Otherwise, again, we will put a ribbon on it. And for my private community, we may have another call after this. Depends on you guys' needs, obviously. But just let me know in my DMs or in the Discord, and we'll make plans around that. All good. Okay, thank you, Sufi, for letting me know. Fritz, okay, perfect. Thank you. Okay. Nutty Fafa, if you're still here, or anyone that didn't answer, just let me know with a thumbs up, or if things are okay, and we can call it a day. All good. Okay. All right. Well, with that being said, you guys, God bless y'all. Appreciate y'all hopping on. Appreciate your time. Hope you guys got more value than you probably showed up to receive today. Hope everything made sense. And if you guys got any questions, as always, I'm always here. Just a DM away. If you haven't, join the free community on Discord. The link is in the description. I'm going to go check that link just in case something's wrong. And if you want to join the private community, definitely do that. If you haven't subscribed yet, definitely do that as well, if you support the channel. And if you have any friends that you think can find value from what it is we do here, maybe they can add to the conversation, or maybe they just love trading as much as you do, and you think that they can get value from hanging out with us, let them know. Send them the link. Maybe even send them my Instagram. Maybe have them DM me. But yeah, let's try to make this community grow and support each other. And yeah, with that being said, thank you guys for your time. God bless. Let me know if you have any questions, and I will see y'all on Tuesday. Right? So take care.